மேடம்
இங்கே பாருங்க ஜி. யாரு சார் எங்கேயோ பண்ணிட்டாரு. என்னைய ஒத்து பார்ப்பேன் சார் தான் வராது போல இருக்கு. மணி எவ்வளோச்சு எக்ஸாக்டா? சார் பாருங்க, அமைதியாக இருக்கணும். டைம் வச்சு ஆரம்பிங்க. வெல்கம் வெல்கம் ஆல் பார்ட்டிசிபென்ட்ஸ் எல்லாம் சொல்லுங்கள். லிங்க் அனுப்பிச்சுட்ருங்க. லிங்க் அனுப்பிச்சுட்ருங்களா? என்ன போட்டிருக்கீங்க? லிங்க் வந்து மேக்ஸிமம் போவாங்க. ஏதாவது லிங்க் வந்தால் போவாங்க.
கீழே எது இருக்கோ அதான் ஃபஸ்ட்டு கிளிக் பண்ணுவேன். மேலே இருக்கிறத கிளிக் பண்ண மாட்டேன்.
ஏன்?
அதான் லாஜிக்.
தப்பு. ஆமாம், கரெக்டாக சொல்கிறீங்க.
ஃபஸ்ட்டு எது இருக்கோ நோட்டிஃபிகேஷன் பண்ணி போயிடும். அதுக்குள்ளே வந்துட்டாங்க.
சப்ஸ்கிரைப் 142 சப்ஸ்கிரைப் வந்திருக்காங்க ஜி. சப்ஸ்கிரைப் பண்ண சொல்லுங்கள் எல்லாத்தையும்.
சொல்லிக்கலாம், நான் சொல்லவே இல்லையே.
கைண்ட்லி
அதை மட்டும் தனியாக காப்பி பண்ணி சப்ஸ்கிரைப் போடணும். ஈவினிங் அதை போகிறதுக்கு முன்னாடி எனக்கு அனுப்பிச்சி விடு.
சரி.
சப்ஸ்கிரைப் போட்டு
நம்ம ஸ்டூடியோவை வந்து என்னங்க முல்லைப்பூவா?
இப்போவா? நான் உங்களுக்கு ஹார்டின் போட்டிருக்கேன். போயிடும் ஜெல் பென்.
சார் சார்
கடிச்சு வச்சுட்டுமா?
சார் முரளி சார்,
வாய்ஸ் ஆடிபிள் சொல்லுங்கள். வாய்ஸ் ஆடிபிள் பக்கத்து.
How are you, sir?
fine sir. How are you sir?
Very fine, sir. Very fine, sir.
Okay sir. Okay sir. Tomorrow you will come and
Yes, yes.
take
I will
lecture,
take tomorrow's class. E-way bill.
Okay bro. Okay sir. Okay sir. Okay sir.
I will take and the assessment procedure will be taken by my wife.
Yes sir. Yes sir. Madam told me sir.
Yes, 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 sir.
அசஸ்மெண்ட்.
Sir, tomorrow are you going to provide hands-on training
Yeah, I'm going to
regarding
provide.
e-way bill?
I will provide.
Okay sir. Okay.
I will provide the slides. They can go through the slides and try them after the session.
Okay sir.
மொபைல் முடிஞ்ச பாரு. அப்புறம் சூடாக இருக்கீங்க. யா நோ யுவர் சூடு. நோ சூடு நோ சரணை. யா
அதுதான் நல்லது. இல்லாத வரைக்கும்
என்னாச்சு? என்னாச்சு சூடாக இருக்கீங்க? பா
நல்ல வேலை வாயில் போட்டு விட்டுருச்சு.
குங்குமம் அழிஞ்சிடுச்சு.
என்ன பண்ணீங்க?
குங்குமத்தை ஃபுல்லாக அடிச்சு விட்டேன். சந்தனம் மட்டும் ஒரு மாதிரி எங்கேயோ போய் போயிருக்கு. ஜி எந்திரிங்க ஜி, கொதிக்கிறீங்க ஜி. ஆமாம்
வாயில் போடுங்க.
அப்படி தான் தோணுது.
மேக்கப் போயிடுச்சா?
ஆமாம்
அடிச்சு விட்டீங்களா?
இல்லை இல்லை.
இப்போ
ஆமாம் ஓகே.
ஹலோ சார். கனெக்ட் ஆகிட்டு டிஸ்கனெக்ட் ஆகிட்டு சார் ஃபோன் பண்ணலான்னு இருந்தேங்க சார். இதை பண்ணுறேங்க சார். எஸ் சார். இதை நான் ஆனந்த் சார் கூப்பிடுறேங்க சார். எஸ் சார். ஓகே சார். A warm good afternoon for all the participants watching on YouTube Live. The sessions will start in 5 minutes, so stay tuned. Dear participants, warm welcome to all of you who are watching on YouTube Live. The sessions will start in 5 minutes.
Kaleeswari? Kaleeswari?
Yes, sir.
Now check YouTube. Voice is clear or not?
Sir?
Check
Sir, there is a
YouTube.
echo, sir.
Echo, huh?
Yes, sir. Yes, sir.
சாரோட ஃபோன் ஆன்ல இருக்கு நினைக்கிறேன். அது யாரோடது? நம்மளோட மட்டும் ஓப்பன் பண்ணிக்கங்க, மியூட் பண்ணிக்கங்க. சார் ஃபோன்லேயே சார் வச்சுருக்கீங்க? ஃபோனில் மியூட் பண்ணிடுங்க சார். மியூட் ஆயிடுச்சா? ஓகே. கொஞ்சம் சிஸ்டம் திருப்பி வைங்க கலேஷ். சார் கார்னரில் இருக்காங்க. கொஞ்சம் இன்னும் கொஞ்சம் லைட்டாக திருப்பி வைங்க. இல்லை எப்படி இப்படி ஆப்போசிட் சைடு இப்படி ஆப்போசிட் சைடு சார். நீங்கள் இப்படி அங்கே நீங்கள் கேமரா போகிறேங்க சார். இப்படி திருப்புங்க. ஓகே ஃபைன். கொஞ்சம் லவுடாகவே பேசுங்க சார். என்னாச்சு? காலேஜ்
Anand sir, welcome.
Thank you, sir. Thank you.
Anand
Good
sir.
afternoon, sir. Good afternoon, sir.
Anand,
Good afternoon, sir.
how are you?
Fine. Am I loud and
You all
clear?
the way. Yeah, you are loud,
Thank you.
but not like my voice.
I am your Shishya, so you should not go beyond your Guru's voice.
Oh, yes. Right. I will close my video and audio.
I start.
So
Respected
much,
today's lesson, dear professors, research scholars, students, other participants. Very good afternoon, all of you. Dear participants, books and records of GST, which cover the types of documents, procedures, mode of maintenance of books and records, and format of documents. This session may be discussed and demonstrated in practical way with examples. The sessions will be more informative and brainstorming and also create enthusiastic participants.
I'm sure that I will feel, I'm sure that you all will feel enriched with knowledge after completion of today's session. On behalf of Parkland University, I feel honored to welcome resource person P. Anand sir, Chartered Accountant, Chennai, for giving a lecture in both today's sessions. I thank you very much, sir, for accepting our invitation. I am also delighted to introduce the resource person. P. Anand is a certified chartered accountant and partner in GN Shankar and Co. Chennai. He did his chartered accountant course
வாய்ஸ்
under
கேட்கல.
P. Narayan Swami,
சீரியஸாக கேட்கல.
chartered accountant, partner S.
வெளியே வந்துட்டாங்க. இங்கே வெளியே வந்துட்டாங்க.
Chennai. He also did MBA in International Taxation.
சார் மியூட் பண்ணுங்க.
He is the chairman of Information Technology Committee.
கட்டாக இருக்குது சார். கட்டாக மியூட் பண்ணுங்க நிமிஷங்க. இல்லை வாய்ஸ் வரல. லாகின் ரீலாகின் பண்ணுங்கள் சார். ஒன் செகண்ட் படிச்சிருங்க சார். ஃபஸ்ட் படிச்சிருங்க சார். வாய்ஸு இன்பிட்வீனில் பிரேக் கட் ஆயிடுச்சு சார். நெட்வொர்க் இஷ்யூன்னு சொல்லிட்டு பேசுங்க.
No check. Voice is audible.
Yes, sir, audible.
Sorry for the interruption. Respected today resource person P. Anand sir, dear professors, research scholars, students and other participants. Very good afternoon all of you. Dear participant, today topic is books and records of GST, which cover the types of documents, procedures, mode of maintenance of books and records, and format of documents. The session may be discussed and demonstrated in practical way with examples. The sessions will be more informative and brainstorming also create enthusiastic participants. I am sure that you all will feel enriched with knowledge after completion of today's sessions. On behalf of Bharatiya University, I feel honored to welcome resource person P. Anand, Chartered Accountant, Chennai, for giving a lecture in the 4th-day sessions. I thank you very much, sir, for accepting our invitation. Also delighted to introduce the resource person. P. Anand is certified chartered accountant and partner in GVN Shankar and Co. Chennai. He did his chartered accountant's course under G. Narayanaswamy Chartered Accountant, partner S. Venkatraman and Co. Chennai. He also did MBA in International Taxation. He is the chairman of Information Technology Committee, Kanjipuram District, Punjab, the Society for Implementation Research Collaboration, that is SIRC of ICAI. He is a faculty in Kanjipuram District, Punjab, SIRC of ICAI. He is a faculty of Ethical Standard Board of ICAI for Code of Ethics 2019. He is in practice for more than a decade and handled audit of corporates, non-corporates, the field of taxation, central statutory audit of bank, audit of educational institutions and trust. He has presented papers in Tambaram continuing professional education, that is CPE Study Circle, Hindustan Chamber of Commerce, T. Nagar West Mambalam Study Circle, Kanjipuram District Punjab SIRC, various colleges and schools. This is great opportunities of third
under Rusa. I trust that everyone can enhance your skills or knowledge through this program. I heartily welcome
Bharatiya University and the Rusa. I trust you enhance your knowledge through this hearty. Thank you. Just how this.
Good afternoon, one and all. Thank you for the wonderful introduction by Jagadishwaran. I thank the Vice Chancellor of the RVR University, Jagadishwaran, and his teammates for arranging this 10-day GST course under the Rusa. Let us move to the session. This is the 4th day of the course on GST. This course is aimed in advancing the skill set of persons who are completing the graduation or post-graduation and who are venturing into the profession or business or any occasion. This entire skill set, what you have achieved during the academic period, is something which is you are going to practically implement after completing it. To give you a broader perspective of the differences or the nuances between the study and the practicality is what is being bridged by these kind of courses. This is the fourth day, and we are going into the topic of books and records. What is a book and record? Most of you who have done the graduation in the commerce line will know the meaning of books and records and what is particularly pertinent with respect to GST. That is what we are going to see in the upcoming few minutes. The entire law behind the maintenance of books and records I will go through in a quicker fashion. This law has to be studied each and every person who is going to handle GST. It is not for any experts. It is not only for any practicing professionals. The law should be learned by every person who is encountering GST. They may not become an expert. They need not go in depth into the reading the lines of the sections, understanding meticulously all these things. They need not go through any in-depth fashion. But a plain reading of the law is a must for all persons who are going to deal with GST. So maintenance of books and record. Section 35 and 36, read with rules 56, 57 and 58, talks about the maintenance of books and records. Under section 35, read with rule 56, every registered taxable person shall keep and maintain accounts of production or manufacture of goods, inward or outward supply of goods and or services, stock of goods, input tax credit availed, output tax payable and paid, such other particulars as may be prescribed in this behalf. This is the overall section which gives you the entire gambit of what are all the records and books which need to be maintained. As such, in GST and most of the laws which has been enacted, it is the compliance aspect and the any information which is being supplied to the government or to the authorities who administer the law, they are expected to give a true and correct picture, and whatever they provide or whatever the returns, whatever their submissions, it is prima facie accepted as true and correct, and the entire onus is with the person who is filing. So any person who is GST registered taxable person is supposed to give a true and correct picture to the government by whatever returns or whatever things he is producing to the government and whatever the records and books he is maintaining with respect to GST. This is the overall expectation of the government and the law. So what is the production or manufacture of goods? So when it comes to the manufacturing industry or any industry which produces some commodity, it is the record which shows what are all the items manufactured and out of which items these items are manufactured, and what are all the where the manufactured items are stored and where how it is being disposed or sold. These records are the prime record which is required under the production or manufacture of goods. With respect to inward or outward supply of goods or services, with respect to inwards, when it comes to a manufacturing company, it is the raw material which is the inward material. When you talk about a trading concern, it is nothing but the items which you bought for sale. And outward is nothing but the sale of your finished product or the goods which in which you trade. So what are all the items which is coming as inward supply And what are all these items which are going as outward supply or services? When with respect to service, it is a service industry, it is services. You have to maintain the proper accounts which will enable any person to find out what is the input and what is the output. And stock of goods, it is nothing but the movement of the goods, what the stock register, what we call. Input tax credit availed, output tax payable and paid. Input tax credit availed is nothing but what are all the goods you have purchased, in which what are all the eligible credit you availed in the your final discharge of output tax payable, and that credit which you have availed should be maintained separately so that month on month what are all the credit availed, that can be easily traceable to the particular list. So whatever you claim in your returns, so when you see in the return, you will be see what are all the items you punch in the return. In return, you will say a column where you availed what is the input tax credit availed. For that breakup, you have to maintain as input tax credit availed register. Similarly, output tax payable and paid. It is nothing but output tax. This input tax credit and output tax you can simply call as a purchase register and sales register. But there are some small differences with respect to this thing, which is no, you can have a consolidated purchase register where you have entire column which from where you can take the input tax credit availed, or you can have a separate register, because all purchases doesn't qualify for input tax credit. There may be some ineligible credits or something which you may not be there, or some purchases you may have purchases from unregistered dealer for which the input tax credit will not be availed or will not be mentioned there. So there it is a bifurcation available should be there. So as such, purchase register should have all the items you purchased, whether the input tax credit availed or not. In that you have to specifically have a input tax credit availed. This is specifically the reason is to find out what is the breakup of the input tax, because when you file a return for claiming the input tax, you will give the summary. From the summary, what is the breakup on month, you should be able to trace and find it out. Similarly, for output tax payable, it is nothing but the sales register. You have to maintain what are all the output, what are all the supplies you made, that is what is in the sales you have made, and the details of those things. And such other particulars as may be prescribed. A GST or any law as such, no? Whenever you study a law, and particularly with respect to taxations, there will be amendments, notifications which will be given as and when, depending upon the circumstances and various representations or various changes that take place in the budgets and other things. So you have to go on reading that along with the law, what are all the notifications and other changes that has occurred in the law. So anything that the government may prescribe. In this particular GST, it is mostly the GST Council prescribes the various guidelines. They may require you to maintain certain records and things which is in the on the ongoing process. So when GST was introduced, the input tax credit actually was a GSTR2 return, which has been auto-populated in the website, which has to be accepted or rejected based on the items you have purchased. This was the first envisage. Now you have filed now you get a GSTR2A which you have to reconcile with your purchase register. As such, you are not maintaining. There is some changes also is going on for the 2A. So whenever these kind of changes is being applied, the government will ask you to maintain, or this GST Council will ask you to maintain any other records which may required for the purpose of ascertaining the correctness of the records and books maintained under the GST law. Apart from this, what are all the other things which is been prescribed under section 35? One is, it is true and correct account of goods and services. This is what I already mentioned. The government expects us the person, GST registered person, to give the accounts a true and correct picture. So whatever things which has been goods or services which is imported or exported, you have to maintain the true and correct account of the goods imported or exported, and supplies attracting payment of tax on reverse charge along with relevant documents, including invoices, bill of supply, delivery challan, credit notes, debit notes, receipt vouchers, payment vouchers, and refund vouchers. We will see what are all these items one by one later on in the session. So these are all the documents, relevant documents you have to maintain for the taxes which you paying to be payable on reverse charge basis also. This is what the requirement of law. So for the payment of tax and reverse charge, yesterday you would have heard about what is the reverse charge, what is the basis of the reverse charge. And when it comes to where to maintain the books, when you say books of account has to be maintained, the law says it is at the principal place of business mentioned in the certificate of registration. What is the principal place? It is nothing but when you register the GST, you have mentioned the place of business. That is the place of business where you are required to maintain the books of and records. Apart from the principal place, you may have additional place of business, the branches, or the places where you maintain godowns. So when it is a single premises, in the same premises you have to maintain. If it is in multiple premises, you have to maintain in those in their respective places. How to maintain? A few years back or a decade back, all the records were mostly manual. Exceptionally, there were bigger companies and bigger organizations which have been maintaining electronically. Now, from small petty shops to small individual business persons to large business houses, everything is almost become electronic. So you can maintain all the books and records in electronic form, and it has to be provided on demand. This is what the requirement under Rule 57. So what is electronic maintenance? It's nothing but what are all the books and records which has been required to maintain under the law. You can maintain it electronically, and the whatever records you maintain electronically should be made available to the person, that is the GST administrative persons, the superintendent or any other persons in the jurisdiction under which you fall. If they ask some details, you should be able to provide in such a manner. That is the way you should maintain the electronic records. Period of maintenance. The law says 72 months from the due date of filing annual return. So when the annual return is due, it is the next year December. So this year annual return is being due in the coming year December actually, but there are circumstances. The law has been in the nascent stages. There are various relaxations and extensions which have been given. So whenever the due date is been fixed as a particular date, from that due date of the annual return, 72 months, that is almost 6 years, you have to maintain the books and records. So in case of appeals, revisions, proceedings or investigation pending, you have to maintain 1 year after the final disposal period. So whichever is later, so the disposal, if the case is there, pending case is there, proceedings within the 72 months period, then you have to maintain for 72 months. And if it is beyond that 72 months, till the appeal or the revision is completed, finally disposed of, from that date to the another 1 year, you have to maintain the books and records. Books to be maintained. We will differentiate or bifurcate this into 4 categories, and we will see. First is the books of accounts maintained by dealers. General books of accounts. Whatever the business, whoever does the business, these are the general set of books of accounts which are to be maintained by any business person. The journals, the ledgers, trial balance, trading and profit and loss account, balance sheet. Next comes the stock register. This is one of the most important register which has to be maintained properly by any person who is dealing with who is registered under the indirect tax mechanism at any country or any place throughout the world. This is what the stock register is, the most important register which has to be maintained properly with proper information spread into it. This is also a register which will enable the business people to have the control on their entire items which they manufacture or they trade. So normally the businesses managers cannot go on look into small items. So it is the stock register which gives them an assurance on the control of the various activities that is being performed on the stock, whether the particular stock has been properly handled, whether there is any deficiency in the items purchased, whether there is any deficiency in the manufacturing process. All these control mechanism with respect to the stock or the item which is being manufactured or traded is routed to the stock register. With the stock register, the owners of the business have control on the asset, that is the traded asset which is they are trading. So it is a most important register. So whoever comes into the GST administration part should know the importance of stock register and what is the various items which are required to be maintained in the stock register. Normally the stock register will have the opening balance, that is it is carried out from the previous financial year. What are all the receipts, the supply, the goods lost, stolen, destroyed, written off or disposed by way of gift or free sample, and balance of stock including raw material, finished goods, scrap and wastage thereof, insurance claim if any. These are all the broad particulars which is required under GST law. This doesn't confine the GST, that is the stock registers format or something else. These are the particular items which are required to be captured in the GST register as such. This is with respect to stock register. Why these are all so pertinent? With respect to receipt, so the stock register will contain what are all the items which has been received, so that you can have the control on the items purchased. The entire purchase is being captured, and what all the input tax credit which has been availed you through the purchase invoices or the supply invoices, the particular items which has been received in the factory or not, it can be traced to the stock register. So receipt is more important with respect to the items which you take input tax credit, and also with respect to the items you manufacture out of it or the items which you sell. So this receipt is what the items you purchase. It is the inward supply of materials. Supply is nothing but we say the outward supply. Outward supply of material just to be recorded. Goods lost, stolen, destroyed. What makes these items is more pertinent in GST is whenever a goods is lost or stolen or destroyed or written off or disposed of whatever as a free sample, the particular items input tax credit, the proportionate input tax credit with respect to those goods which has been lost, stolen or destroyed has to be reversed. So when you capture such an item in stock register, the main and the most important thing you have to remember is you have to pass a journal to reverse the proportionate input tax availed on those goods which has been lost, stolen or destroyed. The balance stock, on a daily basis you have to maintain the balance stock of raw material separately. Is what are they called as stock register. Normally will have multiple stock registers for raw materials, for work in progress, for finished goods, for scrap and wastage. These are things to be maintained separately for different categories of stock items. Next, insurance claims if any. So whenever the stock is lost or stock being destroyed, there will be insurance claim which you've been lodged with. Mostly the stocks are insured and you will lodge a insurance claim. Whenever the insurance claim comes, the stock, when the stock is lost, you will reverse the input tax credit which has been availed on particular stock, and what all the insurance claim which has been lodged on that particular stock and which has been received, no, you have to separately maintain. This is to ascertain that the insurance claim, if any is there and which is pending or which is received, which has to be recorded, so that there is a transaction of stock loss, and for that transaction of loss, whether any input tax availed is reversed or not, that can be traced. This is the reason why the insurance claim has to be recorded in the stock register. This is a sample stock register format. This format is not fixed. You need to capture all the details. That is what the purpose. I am just giving you this format to have a glimpse of it and to have a look on how the stock register will have. This is a manual stock register format which I am showing you. This can be, you can maintain this electronically in Excel sheet, or you can have it programmed in your software. And if you are using Tally, there is a inventory management module in Tally. Similarly, different softwares have their own inventory management. So you have to maintain either electronically in those softwares, or if you are a small company, you are not maintaining the inventory accounts as such in software, you can maintain this in your Excel sheet. And if it is so much you don't, the persons who are maintaining the stock doesn't have the Excel knowledge, they can maintain it manually in the stock register, which is in this particular format. This is a electronic stock register format in the Excel, which I am showing you for a purpose of knowing how it looks, how a stock register looks. Next is the advanced register. And what is an advanced register? It is a register for advances received, paid, and adjustments thereto. What is the significance of this advanced register? So when it comes to GST, the books and records become more pertinent or more important, because this is which will show to the administrator of the GST, or the lawmaker of the GST, or law administrator of GST, that whatever the transaction you do are legitimate or within the four corners of law. So this is what is going to prove to your jurisdictional officers that you are doing the business as per the law. So it is nothing like a certificate. It has been, it acts as a evidence for issuing a certificate for your compliance with law. So that is why each and every registers and each and every books and records what we discuss here are very important, and it has to be adhered to the complete perfection and complete satisfaction, so that the information which is retrieved for various purposes are properly extracted from these books and records which you are going to maintain. What is an advance register? Let us see what is an advance. An advance is a money you receive from your client for the supplies you are going to make in the future. So normally, in a sale agreement, say you have entered with an agreement with XYZ. The XYZ asks you to supply 100 quantities, for which he may pay some, say 100 quantities cost you 1000 rupees, mean he may pay you 500 rupees in advance. So whenever an advance is received, GST has to be discharged. This is what the GST law. So when you talk about supply, when you call about supply, and when the liability freezes, all these things when you come across in the upcoming sessions, you will understand why, when to discharge the GST liability. So it is not only when you sell, but when you receive an advance for a sale also, the liability freezes and you have to discharge that liability. So to find out the liability, whatever the advances received, you have to maintain a advances received register. Similarly for advance paid also, because the other party would have paid to the other party the GST on the advances you pay. And whenever these advances are received and the GST has been collected and you have remitted to the government through your GST or returns, subsequently when you make the actual sale, that is actual supply of the goods, this whatever amount on the advance, GST amount on the advances, you can use that or you can offset that, and then you need not pay that amount at the time of sale. The balance amount you can pay or adjust with your input GST. That is what the purpose. So in the advance register, you will have columns to maintain that whether what is the advance amount received, when the advance limit, what is the GST amount which is being collected on the advance, and in which month the GST return which has been, that amount has been discharged, that is paid to the government. And when it is comes to the subsequent sale, what is the when the sale is made on under what are and what invoice number that particular sale is, and when the in which month return that is the particular advance adjustment against the sale has been made. All this information has to be captured in the advance register, so that it will give you the actual picture on how your adjustments has been made. Next is tax records. Tax records. What is behind the tax record? What you on advances you keep what are all the GST components which is collected and remitted to you, capture on the advance register. Similarly for tax records, it is for the entire thing. It is what are all the details of tax payable, the tax paid on the reverse charge, tax, what is the tax collected and paid, the input tax. All these are, it is captured in different records or different books. This is all collectively called as tax records. The rule 56.4 expects a GST registered person to maintain all these records to capture these informations. So it may be a consolidated register which contain all these informations, or separate register maintaining the various aspects which are to be captured, and thus the GST officers or any persons who are comes for an inspection able to extract these informations. The details of tax payable, the tax paid on the reverse charge, tax collected and paid, input tax credit claim, a register of tax invoice, credit notes, debit notes, delivery challan issued or received during any period. We will see an example on these things in the coming slides also. This is what the GST input tax report register which is to be maintained. This is just a sample. Depending upon the business, depending upon the transactions you enter, there may be some changes which may be required in the particular format. So I have just picked a format to give you a glimpse of how it looks. This is an input tax report register, where you have the month for which the input tax has been claimed. It contains the serial number, the bill numbers, the bill date, the supplier name, the supplier's GST number, what is the taxable amount, what are all the GST components, CGST, SGST and IGST, rate wise and the amount wise, with the total invoice value. This captured in the GST input tax report or the GST input tax register. This is what a GST sales register. The GST sales register is nothing but the summary of what are all the invoices you have raised and the various components of the invoices. In this particular sales register, it is buyer wise, the taxable amount of the GST components are registered. That is what is captured. You may also be required to capture the HSN wise, that is the item wise descriptions and the item wise what are the tax components and the rate on which the particular item is sold. That is also to be required. Normally, that will be captured in the stock register, that is the finished goods register, finished goods stock register. You will have the item wise details, HSN code wise will be captured. But it is in a if you wanted to extract easily, you can keep those records also in the GST sales register itself captured. So when you file the GSTR1 return, so for large taxpayers, it is asking for you to provide line by line, item wise, the various quantities sold and what is the tax on the, with the different tax rates also. So that will be a comprehensive register. So depending upon the size of the business, what is the type of business, no, the format of this GST sales register will change slightly, but majorly these the taxable amounts, CGST, SGST, IGST components, the rate components, all the BIOS details, all these things has to be captured in a GST sales register. This is a sample monthly GST input and output tax report. This is nothing a summary you capture for the purpose of filing GSTR 3B. The GSTR 3B is the return which is you are filing for the discharge of the GST liability. For the purpose of that GSTR 3B, you will have a column where you will have the what are all the liabilities and the what are all the how the liabilities is being discharged. So in this particular GST input output tax report, what is the format? No, what is the actual opening balance of ITC or the cash register balances you have in your cash ledger or the credit ledger, and what is the ITC which is being claimed in the particular month, and ITC reversed or ITC on reverse charge which is being liability on the particular item, and what is the taxable value, the sales, the debit notes, less the purchase or the credit notes, and how the current month ITC is paid through cash, and what is the balance carry forward if any. This is the various items line by line you have to maintain for the purpose of the GST. This is only GST input output tax register which has to be maintained. These kind of records, now if you have been able to develop a comprehensive register from where you can pick up all these things, that can be done, but month by month the summary has to be kept for your ready reference so that it can be matched with your GST returns as such. And address register, this is another register where it asks you to access to the GST registered persons to maintain this, the name and complete address of the suppliers, the recipients, that is the inward suppliers and the outward suppliers, the godowns including goods stored during transit along with the particulars of stock stored in. So to maintain a comprehensive register for this, the name and address, normally whenever you have any softwares, you capture the entire name and complete address of the suppliers, the vendors and the customers you have. So this register, now if you are not maintaining in your software separately, you can maintain it in a manual register or in a Excel sheet or any spreadsheet or any register notebook also. You can maintain this complete address details. This is a sample address register which you can maintain in a Excel spreadsheet where you have the contact name, the GST number, the registration type, the PAN number, the addresses, and the country, state, PIN code, phone number, email, all the contact details has to be maintained comprehensively. Agency register. Agency register is nothing but a register which is maintained by the agents. Normally there is a principal and agent relationship exists in the agency business. What agency business is, you don't own the buy, you don't buy a goods and sell. You get a good from your principal and sell on behalf of him. So various agents you have heard about that. What they do, no, they will not buy the goods. The supplier, that is the principal goods, they will trade. They will collect the orders on behalf of the principal, and based on the orders, what they know, they will collect the goods and sell to the particular sellers. So these agents, principal agent relationship wherever exist in a particular business, they have to maintain an agency register. So in this agency register, they have to maintain what are the authorization received from each principal. In which authority they are acting as an agent. They cannot just like that become an agent. The principal has to give an authority to acting for him for as an agent for him. So that principal authorization letter or authorization agreement should be available with the agent. A principal including particulars including description, value, and goods. What are all the goods which has been traded on behalf of the principal? So one agent may be dealing with multiple principals. So for a particular principal, what are all the goods which is in trading or he is receiving and selling? No, that principal wise he has to maintain that register in this register. And in case of supply also the same thing will apply. And what are the accounts furnished to every principal? He may be furnishing what are the orders he has collected on behalf of the principal, what are the orders executed, if there is any discounts given, in cases of where there is amount is being received. All these transactions, what he does on behalf of the principals has to be maintained. That account which he furnishes to the principal has to be maintained. Tax paid on receipt of or on supply of goods effected on behalf of. So in GST normally whenever there is a principal agency relationship occurs, whenever there is a discharge of GST liability on behalf of the principal, that has to be maintained in the agency register. Production register. This is another important register when it comes to GST. As such, wherever manufacturer or production of goods, this production register will come into picture. So stock register, as such, stock register has a movement of goods with respect to stock, and whatever any changes or any alterations or any manufacturing process that has been done on the particular raw material or particular goods, this production register is important. So the production register will say what are the quantities of raw materials you have used in the manufacture, and what are all the quantities which has gone out as a finished goods, and what is the any wastages. So this is captured in the production register, so that you will be able to find out what is the input output ratio. So whatever the say some jargons which has been say input output ratios, what I am saying now, and some other terminologies which if you do not understand, kindly note those terminologies and try to learn what is about that. But each and every item what we teach in this particular 10-day
Excuse me,
program.
sir.
Yes, madam.
Sir, the slides are delay in reaching, sir.
Okay, can I represent it?
No, sir. Now the slide is in agency register, sir.
My screen it is showing in the production register. Can I represent it? Now it is updated.
Okay, sir. Now it is in production register.
Okay. If I change the next screen, it is not changing. No, kindly intimate so that I will check whether there is any alteration
Okay, sir,
to be done. Okay.
Okay, sir. Yes, sir. You can continue, sir. Thank you, sir.
So production register is for finding out the input and output ratios. Register of services. It is nothing but the production register for service kind of things. What are all the items which is used for in the production of services, provision of services, and what are all the input services utilized and the services supplied. Normally when you say in services, now I'm giving an example of the maintenance contracts. Say for a machinery maintenance, you have a service contract. For the purpose of machinery, you may be using some spare parts. The service provider may be using some spare parts, or he may be availing services from some other expert. So in the particular machinery, say some electrical component is there, he may avail the service of some other electrical service provider. So that these kind of items, you have to maintain a register for what are the quantities, that is any consumable item used in the service of the particular item, or any services, external services you avail. This is what you have to maintain in the register of services. Works contract register. This, like the services, that's what is called. No, there will be some works contracts which you will be executing. The works contract is nothing but instead of a small service or a bigger service, you will enter with a works contractor to execute certain work for you on behalf of you to be executed in your factory or in on your machinery or something like that. So this is a works contract, or you may give some job work to some other persons. All this type of works contract will come under this works contract, and you have to maintain the particular contract details in your works contract register, the name and address of on whose behalf the works contract is executed, and what is the description, value, and quantity of the goods or services received for the execution of work. So you can imagine that you have been asked, you are a works contractor, you have been asked to provide a service in a factory for erecting a particular shed. So if you imagine with these kind of examples, no, you'll be able to understand it properly. So when it comes to execution of the particular shed in the factory, that is a works contract. So whatever you do on behalf of that particular factory, so you have to maintain a record, works contract register, and what are the items you purchased for the particular of erection of the particular shed, the details of the items used, the details of any services you used. You would have used the services, you would have provided your services through your employees or workers, or you may have engaged some other external parties for some other works. Say you are erecting a shed, you may be hiring an electrical contractor or a plumbing contractor. So all these particulars you have to maintain in the works contract register. Similarly, any payments received, any advances received, and all these data to be captured in the works contract register. So other important rules. So this is not only restricted to the GST as such. So any when it comes to bookkeeping, when commerce people will know in the bookkeeping, the entry should not be erased, effaced, or overwritten. So whenever you do some mistakes, you should not erase it completely or you should not overwrite it. Just strike it and correct the entry below. Or if it is a journal register, no, you can pass a rectification entry or rectification journal. Say instead of in a stock register, instead of putting the amount in the receipt column, you wrongly put it in the issued column. Means you need not, you can either strike it off or you can pass an entry for the rectification that issued column. You are nullifying by passing another entry in the received column, mentioning that there is the previous record or previous entry has been wrongly posted. That reversing that entry, will nullify the previous error. Next line you can write pass the correct entry, so that the record is not erased, effaced, or overwritten. Whatever mistakes what you do, it is easily can be traceable. Normally you should not hide something. So if you strike it or if you erase it or if you overwrite it, the other person, the person who is going to see or inspect your register, will feel that you have done something wrongfully. Your intention may not be that, but it will show a picture that you have done something wrongfully. So that kind of impression should not be there. So whatever books and records, whenever you do, it should not be erased or effaced or overturned. So whenever there is a clerical error, this errors what you have mentioned, any rectification or so should be attested by a higher authority. So the clerks or the persons who is writing the books, if they make some entry or something wrongly, and it is being corrected, that has to be intimated to the higher authority and it should be properly attested for the corrections that has been made. And all volume of books to be serially numbered. If you maintain everything, say manually, all the manual register should be serially numbered. And same thing you can maintain electronically also. Whatever the electronic registers you maintain different folders in your computer, or you can have a manual register saying these are all the electronic Excel files or the other files which maintain in a particular computer in the particular folder. You can have a serially numbered register, manual register, or you can have it in that register also in the computer, so that whatever the files you maintain in the computer electronically is serially numbered, or it can be traced to a serially numbered register, so that any person, not the GST authorities or any a person who is administering, even your own boss or your own colleagues, if they wanted to see a particular file, no, they will be able to easily trace it out. So in this corona lockdown, no, many people would have experienced after 2 months or 1.5 months, no, they go to their workplace, and suddenly, after 1.5 months, they wouldn't have remember where they used to store the files, in which computer. At times, the computer would have been shifted during the lockdown period, so that no, it will become very difficult for you to trace in which folder it is. It will take some time to recollect where you stored certain files. So for these kind of situations, no, it is better to have a list of files where it is stored and how it is stored. No, then it will be easily for you to find out in which file which record is stored and which register is maintained in the electronic form. When it comes to electronic records, these are all the rules in Rule 57 which prescribes the proper electronic backup of record should be maintained and preserved. So there is a backup procedure should be there. Whatever you store in your computer, you should have a backup procedure. It is always better, because whenever there is a failure in records, no, it is difficult for you to extract the record. So you should have a periodical backup procedure, a daily backup, a weekly backup, and a monthly backup procedure, so that whenever there is an accidental, you uh, get rid of the data which is stored in the computer, you will be able to extract the latest record, latest file from the backups. Produced on demand, the relevant records and documents duly authenticated by him in a hard copy or in any electronically readable format. So GST authorities require you to maintain these records so that it should be produced on demand. So whenever they demand any records which has been maintained, you should be able to produce that duly authenticated. You should be it should be what the document what you going to present it to your authorities should be duly authenticated, either as a hard copy or in any electronic readable format. Any format which is been they ask for, you should be able to provide in the particular electronic readable format. Provide the details of such files, passwords of such files, and explanation for codes used along with the sample printout. This is also they may ask you, because when you give large volume of records maintained in a particular fashion in your Excel or any electronic form, the other person may not understand as such what you maintain. There may be some abbreviations you would have used, something would have been some code numbers, or your say in your company factory you have a item code, you would have maintained the item code wise register instead of maintaining the description. The item code you may have a separate file which is saying what is the description of the particular item code. So whenever the authorities ask for the explanation, you should be able to provide all these details. And either if they ask for any sample files, say one record they wanted to be in a printout format or multiple records for a sample basis, they get it in the printout. No, that also to be provided to the authorities if they ask for these details. Custodian of goods with unique enrollment number. This is normally with respect to the warehouses and the principal, the agency areas where they they will have a warehouse where you maintain the goods. That custodian of the goods, they will be allotted a unique enrollment number. So that is those persons has to maintain these records. So normally this kind of warehouse people, they have to maintain these records on behalf of the person who is deposited the goods in the warehouses. They maintain books of account with respect to period for which the particular goods remain in the warehouse. Particular relating to dispatch, movement, receipt, and disposal of goods. So whatever it is coming inside the warehouse and going out of on behalf of the particular person should be maintained. It should be available on record at any time. A transporter with unique enrollment number. This is again with respect to transporters. So you may engage one transport contractor with whom they will collect the goods and dispatch your goods to various of your customers. So that transporter has to maintain the goods transported and delivered, and what all the goods in transit, along with the GST number of the registered container. So the transporter has to say what are all the who are all the persons, who are all the registered persons whose goods he is moving, and from where to which place he is moving, and what are all the GST number of those persons. And this data has to be provided by the transporter who was enrolled with the GST authority with an unique enrollment number.
Next meeting.
Now when it comes to books to be maintained by GST, what are the books maintained by the GST network, that we will see. Electronic tax liability ledger. The tax liability ledger is maintained by the GST and the Goods and Service Tax Network. This is the computer which maintains your entire GST transactions, which keeps the liability registers, the liability ledger, which has the debit and the credit. The debit note is on the liability available as a result of your regular return, the demand on assessments, penalty, interest, etc. All this comes under the debit, and the credit comes the TDS credit, the TCS, tax paid on reverse charge mechanism. All these things which comes under the liability register. What are the credits? And it next comes the paid from electronic cash ledger, paid from electronic credit ledger. This is one is cash ledger and another is credit ledger. And balance liability to be paid. This is what the liability register which contains these informations. And now we will see the various registers as such in the GSTN network. So whenever you log in into a screen, this is the screen which you get after login. To prevent the identity of the particular registered person, I have hidden those informations. And when you log in, the login screen, this is the dashboard of the return filing string value. If when you go to the services, area, you will see the various menus. In the ledger menu, you will see the various register, the various books that has been maintained by the GSTN network on behalf of every registered person. You have the electronic cash ledger, the electronic liability register, the electronic credit ledger, the payment towards demand. This is at rare circumstances when there is any demand on due to various any wrongdoings of the registered persons. Then there will be a demand reason raised on, and you have a payment towards that particular demand. That will appear here. We will see this cash ledger, credit ledger, and the liability register, how it looks like. Now we will go to the electronic liability register. When you click the electronic liability register, it will ask for the financial year and the month for which you want to find out. Then you will get the transaction report like this, where you can export this to any PDF or any Excel sheet. So it will contain the date, the reference number. Normally whatever the transaction you make, you will have a reference number. And you can see here, it is the opening in the 25th July, there is a other than reverse charge. This is a liability which is being created on the particular ledger with respect to CGST and SGST. And what are how there is a discharge. This is the first two entries are with respect to the GSTR 3B return which you file. You get a liability being populated in your liability register. This is the cash and credit component which you set off on that particular 3B when you file. Your credit is nothing but the ITC which you avail, that is on the inward supply or the purchases on which you avail the input credit, and the balance credit is being paid through cash. So you can find it out that there is a cash component and a credit component which is being used to offset this liability. So thus you have the multiple component captured in the liability register. Similarly, when it comes to electronic cash ledger, when you go to that same menu, no, you will get this. It lasts for a period. So I have selected from 1st April to 31st July. So you will get the electronic cash ledger. This is the PDF format of the electronic cash ledger which I have downloaded. It will capture all the cash payments made through the GST challans, and which is also what are all the debits. It is nothing but debits, but what are the offsets you have made in the 3B. So there will be a liability which has to be paid by cash, no? That liability which is being discharged, no, that will be available as a debit and credit. The credit is nothing but the value which you have deposited and value which is being adjusted. So these credit and debits in the electronic cash ledger appear in your electronic cash ledger, which you when you go in the GSTN website. So this is the actual display which is shown, and I have downloaded the cash ledger in the previous slide. That is what you have seen. So this is the web version of what is the items which is being shown. You can download the cash ledger into a separate PDF or Excel file. This is what the electronic credit ledger. So credit ledger is nothing but what are all the inputs credits you have availed, no? That you mentioned. Normally you avail the input credit to GSTR 3B return. That GSTR 3B, whenever the ITC avail you enter, and when you submit or when you file that particular return, you can see that credit amount appearing in the particular. You can see this is ITC accrued through inputs. So what are all the ITC availed, no? Through the 3B, no, it will appear here. And when you subsequently utilize that ITC, you can either utilize on the same month or in the subsequent month. Here in the same month it has been utilized. You can see other than reverse charge. So other than reverse charge means the general supply. So a regular sale invoice you have availed this much, and for every month. So this is for March and April. It has been captured in this particular screen. So for the further months, you can see in the navigation pane. This is the first page, second page, third page. You can see I have populated for the 3 months, April to July. So it comes to 2 pages. Depending upon the number of transactions, it will go to multiple sheets. You can navigate, or you can download this register as a Excel or a PDF format, which will be available down when you navigate down here. It will be available in this place where you can download the file in the format which has been specified therein. So whatever the cash payments you make to the GST, no, it is this through this GST challan. So this is what the goods and payment service tax payment receipt. This is the what you this is nothing but the tax payment challan. So whatever the tax paid cash paid to the cash ledger, you pay this to this challan. This is the challan which is generated after the payment. This is a particular challan which I have paid to the State Bank of India. It will contain the CPIN. CPIN is what the particular challan number. It is the particular challan number, and it will also have a SIN number. This is a bank specific number. In case of any discrepancies, this is the reference number with which you have to raise a concern to the particular bank so that this particular transaction number will be routed to the CPN or it will come back to your bank account. So if there is any, the CPN is not generated or the transaction fails, the challan is not generated, this reference number is what you have to get it and forward it to the particular thing. This is the CPN and the SIN number is generated. If the challan is not generated also, you can get this information from the GST website and raise a concern to the GST authorities. And if it is been with the particular bankers, you can raise the concern with the particular bankers. Normally, when the internet is very smooth and when there is a no any errors or any down server down on the bank portal, no, normally the challan will not have any problem. It will generate automatically. And if there is errors or general challan generation, normally it is getting resolved in 24 or 48 hours. Normally you have to do in a say in a smooth fashion when the internet is working very smooth, and when the banking channel internet banking, normally the internet banking, it is down very few times in a year. So normally it will work smoothly. So don't worry if there is any problems. You can raise the issues with the concerned GST person so that it gets resolved, so that the challan is generated. This is what the challan, this is the proof of payment of this. Whatever the amount you paid, no, the here, so here it is paid for on behalf of late fee. All these things will go to the cash ledger. So whatever you paid here, it will be getting captured in the cash ledger. These are all the various forms. So GST, various forms maintained by the or various forms generated by the GST and all the GST PMT01. This is the electronic tax liability register. This is what we saw. PMT02 is credit ledger. PMT03 order for recredit of amount to cash or credit ledger. This with respect to normally any for errors occurs. This is the order they pass to recredit the amount to your cash or credit ledger. GST PMT04 application for intimation of discrepancies in electricity. This is what I said. No, if there is any discrepancy in the payment or any credits, no, this is the form in which you have to make the discrepancies to be made available to the concerned authorities. 05 is the cash ledger. PMT06 is the challan, which you saw in the earlier slide. PMT07 intimation of discrepancy related to payment. This is with respect to any challan. This is with respect to any credit in the ledger. So challan, with respect to challan, you have to raise a concern in the PMT07, and PMT09 is from transfer from one account to another account, from say you want CGST to SGST or say IGST to CGST, like that. If you wanted to transfer from one account to another account, this PMT09. This was not operational for quite a long time. Now they have made it operational, but I have not verified how quickly it works or not. But this is normally, seldom you will do, because the way which the other website has been designed, a transfer from one head to another head is required at occasional time only, not on a regular basis. Now we will move to the next thing. It is the records maintained by dealers. What are all the records to be maintained by dealers? We saw books, we will see records. Books is nothing. What is the difference between books and records? Books is nothing but consolidated summary of the records. So whatever the records you maintain, a summary we have to maintain in the books, or the particulars in the records, no, it has to be captured in the books. So we will see the various records which are to be maintained by the dealers. The first one, as such, GST, the tax invoice. Whatever it is, R46, R14, what I mentioned is the rule number. So whenever you, whatever the study or whenever you go through all these, kindly go through the particular law and the rules as such. This is whatever we, any person who is teaching you. There may be some items which we may skip, or you may not be able to understand in the manner in which we present it. So it is always advisable to go back to the rule or the law or the book from which we teach. You have to read that at least once or twice to get a better understanding. So for law as such, no, any person who is going to deal with any law, no, it is his prime most importance to read the law as such. To understand the law, one may go and get it be clarified with a multiple number of persons or multiple number of teachers. But reading the law is a must. So we have mentioned the rule numbers here for you to go back and see the rule, what it actually says. So with respect to tax invoice, the rule 46 talks about tax invoice. We will see one by one in the coming slides. I will just go through this, what are the various records which is, or various documents which has to be maintained under the GST law. The tax invoice under rule 46, the bill of supply under rule 49, receipt voucher under rule 50, refund voucher under rule 51, payment voucher under rule 52, revised tax invoice credit notes and debit notes. This is nothing but credit notes and debit notes. Rule 53, ISD invoice, the input service distributor, input supply distributor invoice, which is rule 54. E-way bill under rule 138. These are all the various documents. When I will show some templates so that you will have a look on, feel on out what in these documents talk about. This is a GST invoice template. You will see the various items which has been captured in this particular GST invoice. It contains the persons to which goods are sold. It contains their GST number, the invoice number and date, the address along with your own address, your own GST numbers is being captured, the various items which has been sold under the invoice, the tax portion of the particular items, the invoice total summary, the total invoice value, discount, the GST components. All these things are captured in the GST invoice. Now let us see the various transactions and the various documents pertaining to those transactions. We saw the various rules and various things. We will relate those documents with the transactions. The taxable supply to other than composition dealer and input service distributor. So whatever the sale invoice, whatever the sales you make to other than composition dealer and input service distributor. So the input service ISD and the composition dealer, other than those persons, whenever you raise an invoice, that is in a simple term, you raise an invoice to a GST registered person and he is a regular GST dealer. So for him you have to raise a tax invoice. So whenever you are supplying a material to a input ISD, that the input service distributor, then you have to raise a ISD invoice. When you are supplying to an exempted, you are supplying an exempted item, or when you are supplying to a goods opted for composition, you opted for composition, you supply the goods, no, and you are supplying to a registered person who has opted under composition. All these circumstances, you have to raise a bill of supply. So when it comes to supply of goods or services which contains both taxable and exempted, then you have to raise a invoice cum bill of supply. So amendment in transaction. So whenever there is any changes or corrections, no, there is no concept of revision. There is no revision in GST. Remember, there is no revision in GST. So whatever you do is an amendment. So whatever No, previously I told no, whenever you write a record, no, you should not strike it or you should not overwrite it. You do a correction by posting another entry. That is a rectification entry. You pass it on so that that particular effect is getting nullified. A similar concept is being followed throughout GST in electronic filing also. So whenever there is a change or any correction has to be made in for the invoices raised, no, you raise a debit note or credit note correspondingly. So this is no for the amending the transactions. So for advance receipt of supply, you for any advances you receive, we talked about advances register. So for that advances register, you have to issue a receipt voucher. When you refund that advances, you give a refund voucher. So when you make a payment by registered person to supplier, or covered under reverse charge or covered under reverse charge mechanism, you write a payment voucher. This is no. Yesterday you would have talked about that reverse charge, the payment made to advocates or lawyers. They are subject to reverse charge. Actually, they will not collect the GST from you. They will only raise invoices for the particular services alone. What you have to do, no, you have to give a payment voucher to them, and also on the at the time of raising the payment voucher, you have to pay the GST through RCM. This is the reverse charge mechanism. Pay the GST through RCM so that on the particular item you pay on behalf of the your recipient. You are the recipient. You pay on behalf of your supplier. Normally supplier will pay the GST. Here it is a reverse charge. That is what they call as a reverse charge. So you pay the GST on the issue of payment voucher. What you take now, you can take credit through the payment voucher. You have paid the GST. Normally, when you purchase a good from a person who is raising an invoice with the GST, that GST you take it as an input credit. In this particular thing, he is not collecting. The advocate is not collecting. You are paying the GST. So for that GST amount, you can again take that paid GST as your credit. That credit is taken through this payment voucher. So this is the voucher through which you can take the credit RCM credit in your GST returns. Next is the delivery challan. So any movement of goods for job work or stock transfer, and for any movement of goods for exhibition, etc. There are some few circumstances under which you can raise a delivery challan. Most of the transactions, no, which involve the transfer of ownership or which involve the various transfers within the state. Within the state, you know, you can have some transfers within your what you say your branches or thing. Whenever when you transfer goods to your branches situated outside the particular state, no, you will raise an invoice. So in very few circumstances, you raise a delivery challan. For this, so there is a separate format in which the delivery challan has to be raised, and those you have to maintain a separate register for delivery challan. What are the goods moved under the delivery challan? And to give you a glimpse of look how it looks, I've just picked up on GST debit note format. This is one format for GST debit note. You can see the various supplier and other things have been captured. It will also capture the original invoice number and the date against which this particular debit note is being raised. There is some relaxation in this rule as of now, but it was previously, you know, whenever you raise a debit note, it should actually pertain to the invoice. It should contain the invoice number to which the particular debit note is raised. Normally in business now, this is what it happens. You receive on goods on a particular invoice number. Say invoice number 1, you receive goods 100 quantity. You may return 2 quantity as defective. This 2 quantity you will, when you raise a debit note, the original invoice number should be mentioned, so that this original invoice number, the debit note can be traceable to the original invoice for which the particular debit note is being raised. This is the purpose for which. So now the various trade bodies have represented, sir, we will be raising debit notes for multiple invoices, or there may be debit notes ad hocly. Say there will be some price revision across various sale invoices. At times now we will be raising a debit note for that we will not be able to find out for each and every invoices. So some relaxations and some conditions they have prescribed on which the invoice number need not be mentioned. The tracking invoice number need not be mentioned in debit notes. So that relaxations you can see. These are all some extraordinary circumstances to a particular kind of industry or particular kind of business people. These kind of things happen. In regular transaction, normally the debit notes when it can be easily traced to the particular invoice number. So now we will see what is a tax invoice. All registered person other than the supplier of exempted goods or services of both and composition dealer shall issue tax invoice for making taxable supply of goods or services or both, including zero rated supply. So whatever the items you supply for other than exempted goods and for services other than exempted services or for composition dealer, you use a tax invoice. Normally, tax invoice when you sell a particular item to a registered a regular GST dealer, no, you raise a tax invoice. Why they call it a tax invoice? No, this is the invoice. This is the document based on which the other person can take credit in his GST, so that this credit what the tax you collect from the particular person, he can claim as an input when he subsequently sells or subsequently manufactures.
Again,
This way the cascading effect gets nullified, so that the tax on tax is not being levied on the final recipient or the final consumer who goods consumes the particular goods. So this is the tax invoices which it carries the tax component at various stages in which the goods move with various dealers or various registered persons. Bill of supply. This bill of supply is normal. No, this doesn't carry the tax as such. So there is a break in the chain of tax credit mechanism when the bill of supply occurs. When you raise a bill of supply is nothing but when you supply to a person, supply exempted goods, no, you cannot raise a tax invoice because exempted goods doesn't have a tax component. There is no passing on of GST credit. Thus, there is no requirement of tax invoice. There is a raise of bill of supply. So any composition dealer, he cannot collect a tax, so that the passing of credit doesn't occur. So he will raise a bill of supply. So whenever there is no movement of that is credit carrying mechanism is not available or not possible, no, there you will raise a bill of supply. So invoice come bill of supply, this is combination of tax invoice and bill of supply. Whenever you deal with say a taxable good and an exempted good, you can raise a invoice come bill of supply. So it is a combination of both tax invoice and bill of supply.
Like invoice
Receipt voucher. This is what previously I told. No, this is what the voucher you give for the advances you receive, and refund voucher is nothing but whenever you refund the advances. So you receive an advance from your person, from your customer, and later on, no, instead of supplying goods, no, you return back the advance since you are not able to supply the goods or there is some your contract between you and the particular customer gets terminated to any other reasons. No, you return back the advance. For that, you have to raise a refund voucher. So whatever the liability you discharged through receipt voucher. So when I talked about advance register, I said no. Whenever you collect advance, you have to discharge GST liability on the advance. So you would have you discharge GST through that receipt voucher. Whenever you refund the amount, no, you have to again recredit the GST component paid. That you can get done by your refund voucher. So again, the payment voucher is nothing but the voucher I previously told. This is for the payment you made for the person to whom the reverse charge applies. You purchase an item from a person who is liable to be under reverse charge mechanism. So like an advocate, you get an advocate bill. No, there when you make a payment to the advocate, you raise a payment voucher.
Excuse me, sir.
Yeah, tell me, madam.
Sir, shall we have a break, sir?
These two things I will complete, then we will have a break, madam.
Okay, sir. Okay, sir. Sure, sir. Thank you, sir.
Next is the debit note. A debit note and credits note, already I explained you that whatever you have any corrections in your invoices, you cannot give a revised invoice. There is no concept of revision of invoices or of revision of any document in GST. So subsequently, you have to correct that mistakes or anything on the particular document to a counter document. That is what a debit note or credit note is there. So whenever there is a corrections in the tax invoices, either you use a debit note so that you reverse the particular transaction. Credit note, you are again increase the transaction. Here no, you can simply say when there is a taxable value or tax charge in respect of supply is more than taxable value mentioned in invoice, so you raise a debit note. When there is a credit note, no, when the taxable value or tax charge in the tax invoice is found to exceed the taxable value, you raised higher than the actual liability, no, then you raise a credit note. So these are the two circumstances when you raise a debit note and credit note. So when there is a rejection invoices, no, normally you call is a particular party. In financial parlance, what they call as a debit note is the particular party account is being debited. That is what was called as a debit note. Say purchase party, what you do now, the purchase party, purchase account you will debit and the party account you will credit. So if you do any alteration in the particular person's ledger, no, what you know, you will debit his ledger for reverse the purchase transaction. That is what normally in the debit note or credit note means for any of your sale, no, that particular party, the customer you will have debited his account, you will reverse when the sale return comes, or if there are any corrections in that, you will make a credit in his letter. That is what a credit note is mentioned. There is some slight variation in the terminologies and the purpose for which it is used. Debit notes, credit notes, when it comes to GST. You have to understand the differences in the international parlance with respect to debit note and credit note, and what actually GST debit note and credit note speaks about. Because most of the persons who deal with the GST get confused with the general business parlance of debit note and credit note with the GST debit note and credit note. Kindly read this thing once or twice to understand what specifically. When it comes to specifically with the GST, you raise a debit note when there is a difference in tax value which is more than the actual tax payable mentioned in the tax invoice. So in the tax invoice, if you have mentioned the tax rate or amount at a lesser than actual, then you raise a debit note, and vice versa for the credit note. So now we will have a break and we will resume after 15 minutes. That is, now it is 4:04. We will resume at 4:19 or 4:20. Okay. Thank you.
Dear participants, have a break for 15 minutes. Join us by 4:19. Thank you.
ஓகே தானே? இப்போ உனக்கு கேட்க முடியாதுல்ல, சவுண்ட் வரல, ஆடியோ வரலன்னு. உங்கள்கிட்ட சார்ட்டு சொல்லிருங்க சார், இது பண்ணிடுங்க சார், சார்கிட்ட சொல்லிடுங்க இது மாதிரி ரிப்ரசன்ட் பண்ணுங்க. அப்போ ஸ்லோவாக இருக்கும் சார். நிறைய பேர் நீங்கள் ஸ்லைடு சொல்கிறதும் சொல்கிறாங்க. 320 ரெஸ்பான்சஸ் தானா? புதுசுதா? வலிக்குதா? நீங்கள் ஒரு ஆம்பளை பொம்பளைச்சி, ஏன் உம்முன்னு ஆகிட்டீங்க? அது கும்முன்னு இருக்கிற மாதிரி தெரியலையே. நான் ஏதோ கமெண்ட் கொடுத்த மாதிரியும் அந்த கமெண்ட்டுக்கு நீங்கள் ரேஷன் காமிச்ச மாதிரி இருக்கு. சாவி எடுத்த மாதிரியும் ஏன்ஜி சூடாக இருக்குது விஜய். உங்கள் சாரு
அப்படி சுற்றி கட்டி பிடிச்சிக்கவா?
ம்
அதை வச்சு ஒன்றும் பண்ண முடியாது. ஆமாம்.
ரெக்கார்ட் பண்ணிங்க. எவ்வளோ கம்மியாக இருக்குது.
இதெல்லாம் வந்து ஃபோன் பேசுகிற ட்ரை பண்ணக்கூடாது.
குட் ஐடியா.
நோடா
நான் இன்னும் சொல்லுங்கள்.
நானே சொல்லிட்டு இருக்கேன். ஒரு மாதத்தோட சம்பளத்தை போட்டான். ஒரு மாதத்தோட சம்பளத்தை போட்டான்.
எப்போ
இப்போ
வா ட்ரீட்டா
என்ன தங்க வேணும் உனக்கு?
இதே வேணா செலவு
ஏன்னா ஏன்
அப்படின்னு 2 மாதம் 4 மாதம் வருது.
ரோடோட பிச்சை எடுத்துட்டான்.
பரவாயில்லையே. மீட்டிங் நியூ செஷன்ஸ் 1 செகண்ட்.
இல்லைங்க சார்.
சார் காப்பி போட சொல்லிருக்கல சார்.
நம்ம பரவாயில்லைங்க சார். இப்போ நான் எந்த இன்ஸ்டியூஷன்லேருந்து எப்படி காப்பி போடுறதுன்னு பார்த்துட்டு இருக்கேங்க சார்.
என்ன பண்ண தெரியுமா? ஒரு நிமிஷம் இன்ஸ்டியூஷன் கால் பண்ணுறதுக்கு
எக்ஸல்லே அனுப்பியிருக்கோம்.
இல்லைன்னா இப்படி அனுப்பிச்சு விட்டுலாமாங்க சார்?
இந்த ஃபார்மேட் தான் அனுப்பணும்.
சார் அதில் வந்துட்டுங்க சார். இப்போ
நம்ம வேலை பார்த்தது முக்கியம் இல்லை, அதோட முக்கியம் ரெக்கார்ட்
வருஷமாக வந்தவங்க டிஃப்ரென்ஸ் நிறைய 3000 வந்திருப்பாங்க சார்.
செமினார் அட்டன் பண்ணவங்களுக்கு ஃபுல்லாக அந்த 5000 தான் 5000 பேர் போகும். ஆனால் அசஸ்மெண்ட் எத்தனை பேர்?
அசஸ்மெண்ட் இந்த மாதிரி ரேஞ்சில் அட்டன் பண்ணியிருக்காங்க சார்.
அந்த ரேஞ்சு அது ஒரு பிஸ்க்கு வச்சுக்கோ.
சரிங்க சார்.
இல்லைன்னா 2 யூனிஃபார்ம் கூட வச்சுக்கோ. இதுக்கு மேலே நம்பர் தேவை. இது போதும். 1500 அதிகம் தானே.
அதான் சார் ஷார்ட் லிஸ்ட் பண்ண பார்ட்டிசிபென்ட் மட்டும் போட்டுருங்க சார். ஏன்னா இதில் ஒன்னொன்னுலேயும் ஒரு நான் 500 பார்ட்டிசிபென்ட் பண்ணியிருக்காங்க, 1500, 1600 அந்த மாதிரி பார்ட்டிசிபென்ட் பண்ணியிருக்காங்க. ஷார்ட் லிஸ்ட் பண்ண கேண்டிடேட்ஸ் நேமா அது மட்டும்
அது எவ்வளோ?
1530.
எல்லாமே 1530.
இல்லைங்க சார், நம்ம ஷார்ட் லிஸ்ட் பண்ணி இப்போ சர்டிஃபிகேட்காக வச்சுருக்கோம். நீங்கள் அவங்கள மட்டும் போட்டுடலான்னு கேட்குறேன் சார்.
சரி போடு. உனக்கு எது வசதியோ அது போடு. ஒர்க்கு முடியும்.
எது மாதிரி வச்சுப்போம்
நம்பர் இது ஆனால் இது நம்மள்கிட்ட நம்பர் ஆஃப் பார்ட்டிசிபென்ட்ஸ் அட்டெண்டட் இல்லையா?
இருக்காங்க சார்.
அதையா
இப்போ நம்பர் ஆஃப் பார்ட்டிசிபென்ட்ஸ் அட்டெண்டன்ஸ் வந்து 10 நாளுக்கு டிஃபர் ஆகிறாங்க. அதான் சார் நோட் பண்ணியிருக்கேன்.
பரவாயில்ல.
ஆனால் 10 பவுண்ட் கொடுக்கணும் இல்லைங்க சார்?
கொடு.
பரவாயில்ல.
பரவாயில்ல.
உங்களுக்கு எக்ஸாக்ட் கவுண்ட் இருந்தால் அவங்களுக்கும் உங்களுக்கு தெரியும் வந்திருக்காங்கன்னு.
அப்போ சார் அப்டேட்
அப்டேட் பண்ணியிருந்தேன். இப்போ உங்களுக்கு என்ன பண்ணணும்னா இப்போ இந்த எல்லா என்னென்ன காலேஜ் வேணும் அப்படின்னா இதை கிளிக் பண்ணி காப்பி பண்ணி நீங்கள் பண்ணவில்லை இதில் எல்லாமே வந்துருச்சுல. இப்போ இதில் என்ன பண்ணுவோம், நீங்கள் செலக்ட் பண்ணிட்டு ரிமோட் இருக்கும் போல புது டூப்ளிகேட்ஸ் அதை கொடுத்துருங்க. எல்லா காலேஜ் பண்ணணும் ஒரே தான்.
ஒரு இப்போ வந்து இப்போ பாரதி யூனிவர்சிட்டிலேருந்து 4-5 பேர் ரெஜிஸ்டர் பண்ணாங்கன்னா அந்த 5 பேர் அந்த கவுண்ட்டில் காமிக்கணும். இங்கே பார்த்து இந்த ஃபார்மேட் பார்த்துக்கோங்க. இங்கே தெரிஞ்சுங்களா?
அதுபடி அப்போ நீங்கள் என்ன பண்ணணும்னா இதுக்கு
இப்போ நம்பர் ஆஃப் ஸ்டூடெண்ட்ஸ் பெனிஃபிட்டட். இப்போ இந்த பாரதி யூனிவர்சிட்டின்னு வருதுன்னா இங்கே எத்தனை பேர் பெனிஃபிட்?
அப்போ நீங்கள் இது என்ன பண்ணால் ஃபில்டர் போட்டுக்குங்க. ஃபில்டர் போட்டு ஃபில்டர் போட்டு ஏற்றுக்கிட்டு வச்சுக்கோங்க. சரியா? ஒரு கிளாஸ் செலக்ட் பண்ணுங்கள். ஒவ்வொன்றா செலக்ட் பண்ண முடியும். இப்போது ஏஆர்பி காலேஜ் இருக்குங்களா, ஓகே கொடுங்க. கொடுத்து தான் வந்துருக்குங்க.
கோயம்புத்தூரில் நிறையா வருது சார். இப்போ லிஸ்ட் அவுட் பண்ணால் தெரியும் சார்.
இப்போ ஏபிக்கு இப்படிதான் நீங்கள் எடுக்க முடியும். நம்ம கேண்டிடேட்ஸோட இருக்காங்க.
காலேஜ் வைஸ் பார்க்குறது சார்.
ஒவ்வொன்றா தான் பண்ண முடியும். அப்போ தான் உங்களுக்கு வந்து தெரியும். யூனிவர்சிட்டி இன்ஸ்டியூஷன் ஒர்க் போகணும். இல்லை இப்போ என்னென்னா இப்போ ஏவிசி காலேஜ் அடுத்த வருஷம் யூனிவர்சிட்டி நிறைய வரும். ஓகேவா? அப்போ என்ன பண்ணால் ஏவிசி கூட செலக்ட் பண்ணிக்க. ஏவிசி காலேஜ் ஃபுல்லாக செலக்ட் பண்ணிட்டு
அவ்வளோதானே மேலே
ஓகே கொடுத்துருங்க. ஓகே கொடுத்தீங்கன்னா இது வந்து ஏபிசி காலேஜ். சரிங்களா? வேலை பாருங்கள்.
நீங்கள் அனுப்பிடலாமா? ரூசா ஆஃபீஸுக்கு நீங்கள் அனுப்பலாம். 7 மணிக்கு.
சார் கவுண்ட் தான் சார் சார் ஒவ்வொன்றா டேட்டா எடுக்குது. இந்த மாதிரி ஒரு இன்ஸ்டியூஷன் வருதுன்னா டேட்டா கன்ஃபார்மாக டைம் ஆகிடுச்சு. நாளைக்கு வந்துருவாங்க. நம்ம ஒரு இன்ஸ்டியூஷன் பரவாயில்ல சார். கிட்டத்தட்ட மோர் தென் 300 இன்ஸ்டியூஷன்ஸ் இருக்குது. ஒவ்வொன்றா செலக்ட் பண்ணி அந்த ஸ்டூடெண்ட்ஸ் கம்பேர் பண்ணுறது டைம் ஆகிடுது. இன்றைக்கி போட்டு ஏன்னா மணி பே 4:28 ஆக போகுது. இன்றைக்கி ஆகுது சார், நாளைக்கு தான் ஆகுது. இந்த டேட்டா எடுத்து கொடுத்துடலாம்.
சரிம்மா, நீங்கள் வந்து எல்லாமே அட்டெண்டட் ஒரு லிஸ்ட்டு, அசஸ்மெண்ட் ஃபிஸுக்கு வந்து ஒரு லிஸ்ட்டு.
அது ஃபிசிக்கு மட்டும் 10 தனியாக டேபிள் வரும் சார். ஃபிசிக் மட்டும் 10 டேஸ்க்கு 10 விசிட் சென்ட் பண்ணிடுவோம் சார். அதுக்கு 10 லிஸ்ட்டு வரும் சார்.
எல்லாருமே இருக்குன்னா அப்படி தான் வரும்.
எதுக்கு இல்லைங்க சார், ரெஜிஸ்ட்ரேஷன் ஃபார்மில் இருக்கவங்களுக்கு மட்டும் தனியாக போட்டுருக்கோம்.
அட்டெண்டட்
அட்டெண்டன்ஸ் வந்து ஃபீட்பேக் ஃபார்மில் இருக்கவங்க சார்.
ஒவ்வொன்றா நம்ம எடுத்துகிட்டு இருக்கோம், டேட்டா எடுத்துகிட்டு டைம் ஆகிடுது. அது 10 நாள் 10 ஷீட்டு, அது போல் இது 10 ஷீட்டு, மொத்தம் 20 ஷீட்டுங்க சார். ஒவ்வொரு டேட்டா பார்த்தீங்கன்னா ஒவ்வொன்றும் 1500 1300 கேண்டிடேட்ஸ் இருப்பாங்க. டோட்டலாக போட்டுடலாம் சார்.
அது போட்டுடலாம் சார். அவங்க 1 2 3 4 5 லிஸ்ட் அவுட் பண்ண சொல்லியிருக்காங்களே சார், இங்கே பார்த்தீங்களா சார்? இப்போ பாரதி யூனிவர்சிட்டி நீங்கள் போட்டோன்னா நம்ம ஒரு ப்ரோக்ராம் கனெக்ட் பண்ணியிருக்கோம், அதில் இத்தனை 50 மெம்பர்ஸ் நம்ம மென்ஷன் பண்ணியிருக்கோம். இப்போ நம்ம வந்து ஃபீட்பேக் ஃபார்மில் எடுத்தோம்னா ஃபீட்பேக் ஃபார்ம் தான் சார் 2000 பீப்புள்லாம் அட்டன் பண்ணி கொடுத்துருக்காங்க. அப்போ அவங்களத பார்த்தோன்னா டிஃபர் ஆகுது சார். 10 நாளைக்கும் வேறு நிறைய பேர் பார்த்துருக்காங்க யூடியூப்ல போகிறனால. இப்போ 10 ஃபார்ம் கொடுக்கணும்ல சார். அப்போ இங்கே பார்த்தீங்கன்னா சார், அப்புறம் அதுலேயே வேறு யாராவது இருக்காங்களா, அவுட் சைடர்ஸ் இருப்பாங்களா சார், இண்டஸ்ட்ரியல் பீப்புள், அது யாரும் தனியாக லிஸ்ட் அவுட் பண்ணணும் சார். எப்படி கேட்டகரி இப்போ இங்கே 50 வந்துச்சுன்னா இங்கே 2 பீப்புள் வந்து இண்டஸ்ட்ரியல் பீப்புள் போடணும். அந்த மாதிரி தான் இருக்குங்க சார். இவங்க ஏன் சார் கண்டிப்பாக ஃபார்ம் கொடுக்குறாங்க? மேஜர் சேலஞ்சஸ்
Shall we start?
Yes, sir, you can start, sir.
சார் லைவ் போயிட்டுருக்கு சார். லைவ் பண்ணிட்டு என்ன சார்? நான் லிசன் பண்ணிகிட்ருக்கேன். அப்போ தான் சார் நம்ம அதாவது யாராவது இருந்துச்சா பார்க்க முடியும்.
Now we will
லிசன்
go to the
பண்ணிட்டு சேம் டைம்
delivery challan.
பிரேக்கில் பண்ணுற ஸ்கீம் போட்டிருக்கேன்.
At multiple places I am
கண்ட்ரோல் பண்ண முடியாது சார்.
explaining about these various documents which is required under the GST law. So don't think that you are not understood something properly. I am taking this document at various slides. I am explaining about these documents. If you are not able to understand even after all these places, no, you can raise the, your query on based on any understanding of these documents. Now, when you move to delivery challan, and there are situations on which a delivery challan can be issued under the GST. When you supply a liquid gas, where the quantity of time at the time of removal from the place of business of the supplier is not known, you can raise a delivery challan. Transportation of goods for job work. So when you transport a good for job work, so normally job work you transport the goods. After job work is done or after any alteration of any work is done, the goods are getting returned back to you. So at those circumstances you can raise a delivery challan. And transportation of goods for reasons other than way of supply. If you are going to transport the goods not for supply, say you are transferring your factory premises, or it is for some personal use, something it is being transferred other than supply, whatever it is. Certain examples, if you quit now, then it can get confused, certain transactions. So whatever it is not a supply, so you have to first understand what is a supply. Read multiple times to get a grip on the terminology of supply, because it is the backbone of the entire GST. So when you understand the supply concept very thoroughly, almost you will get a grip on the entire GST. So whatever it is transported for other than supply, then you can raise a delivery challan. When a transportation of goods in a semi-knockdown or a complete knockdown condition in batches or lots. So when you say one item is being transported in multiple, can I say, a heavy machinery, 2 or 3 pieces, it has been bifurcated and transported. One vehicle will have the invoices with all the other parts which are delivery challans of other things which is attached. So that way, no, it is a semi knockdown or complete knockdown condition. At that time, you can have a delivery challan. Any other supply as may be notified. So delivery challan, if you will be, the council intends to issue some guidance on using of delivery challan for any other purposes or easing of business or any other representation made by any trade bodies. No, this general rule, no, whatever the laws or regulations, no, they'll have a general clause giving power to the law making authorities to give further notification. That is what they are mentioned here. So for any other supply that may be notified, you can use a delivery channel. Now we will go through the tax invoices. This is the most important component of the documents and record. We will go through the tax invoice some elaborately. What is a tax invoice? When it is being to be raised, all these things we will see. These are all the questions which has to come to be raised or to come to your mind when you consider a tax invoice. Is the transaction a supply? This is the primemost part. If it is a supply or not. Then if it is a supply, then check whether it is a taxable or an exempted supply. So okay, when you have answered which is a taxable supply, then you have to see whether it is a single or multiple. So what is between single or multiple? The invoice contains single item or multiple items in the particular supply. One supply is comprising of single item or multiple items. If it is comprised of multiple items, whether there is a mixed or composite supply. What is a mixed supply and what?
Not audible, sir.
Mixed supply is nothing but no. You go out to a grocery shop, you buy multiple items. It's a mixed supply. There is no requirement for you to buy all the components. So you can buy, say, a biscuit packet and a milk product or some other food product. There is no compulsion. You have to buy this one and that one together. Like there is no compulsion to buy. Then it is that kind of transactions are called mixed supply. I am giving just examples to understand. There are multiple reasons you have to understand this mixed and composite supply. When you encounter these things, you have to go and read what are all mixed supplies, what are all composite supplies. It has been elaborately given. You have to read those things to understand prima facie. This is just a stepping stone for various GST related compliances or GST related practices you are going to make, or GST you are going to work in an industry where you are going to comply with the particular industry's GST laws. Then you have to read all these things elaborately. So for just understanding, and then when it comes to mixed, whatever the goods, there is no relation. You can buy whatever items, and whatever items which is being supplied, it is called a mixed supply. What is a composite supply? When the items are bundled together, so item A and item B are bundled together and sold. It cannot be separable. It cannot be separately sold, and it is being supplied in a composite manner in a single supply invoice, and it is called a composite supply. Then why the importance of this mixed and composite supply is being taught about? No, it is for finding out the rate purposes. What is the rate at which the goods has to be charged? As far as mixed supply is concerned, the rate is to be charged on individual basis. So each item will have a different tariff. According to the particular tariff, the rate has to be charged. Whenever there is a composite supply is being there, no, the rate will become the highest rate. So which item falls in the highest slab, no, that will become the tax rate for the entire item. So that is a composite supplies. So is this supply is goods or services? The tax invoice which you are going to raise is for a goods or services. These are all the questions which has to be answered before raising a tax invoice. Time invoice to be raised. Next is when to raise a tax invoice. It depends upon the time of supply. What is the time of supply? With respect to goods, the earliest of date of issue of invoice, the date of receipt of payment, or last date on which invoice has to be raised. These are the three dates which you have to mark and find out what is the earliest of this date for the goods has to be for a goods the invoice has to be raised. So if it is the date of issue of invoice, that is the actual time of supply. Date of receipt of payment is the earliest, means that is the time of supply. If the last date on which invoice has to be raised is what the earliest date means, that is what the time of supply. Now one may think, what is there is no movement of goods that has been mentioned. We will come to that in oncoming slides. You have to read in a wholesome manner. On prima facie, at the first instance, of those people who are hearing this for the first time, they may feel somewhat confused. Go and read again twice or thrice, then you will appreciate in which the particular things have been drafted. The various you relate with the business transactions which you encounter in your day-to-day life, then you will understand how comprehensively this GST law has been coined. So the supply, understanding the supply, the various this time of supply, the other supply forms, then you will understand the nuances of the GST. Then you will have a grip on the entire GST law. So when it comes to time of supply with respect to services, it is the earliest of date as invoice. The date of invoice should be issued within 30 or 45 days, depending upon the date of service, and or the date of receipt of payment. If you have received the payment, before the service has been rendered, then that is the time of supply. So tax invoice, time to issue for goods. So when it comes to goods, what is the time at which you have to issue the invoice? You talked about time of supply there. You talked about supply. And now you are talking about the issue of goods. What is the relationship? In general rule is before the issue of invoice should be before or at the time of removal goods, whereas in supply involves movement of goods. This is the goods and service tax. It doesn't confine only to goods. It includes services. It doesn't confine only to certain type of goods. It includes all types of goods. Similarly, for services, it doesn't confine to a specific type of services. It covers all types of services. So when you're drafting certain things, there are some peculiarity with respect to transaction when it is with respect to various type of goods and various type of services. We have to cover the entire gamut of goods and services. So these kind of terminologies they have used, and these kind of timing of invoices, time of supply, all these things have been discussed so that the law is very clear, so that the people can follow it. That is the reason behind this. Don't think it should. It is something confusing or something complicating. If you sit, relax, and see the various aspects, one by one, then you will be able to solve the puzzle. It is like a jigsaw puzzle. A jigsaw puzzle can be solved by small kids. Then for youngsters and elders like us, it will be very easy for us to correlate the various aspects of this GST. Where you talked about time of supply. What is a supply? What is the time of supply? What is the time to issue for goods? So goods and services are to be separately read. So because both they have a different way of supply, there is a different time at which it is supplied and different way the particular transaction is executed. So when there is a movement of goods, so within goods, no, there are supply which involves movement of goods. There are supply which doesn't involve movement of goods. So first we will see when there is a movement of goods in a supply, the time to issue invoices before or at the time of removal of goods. So whenever the movement occurs, at the moment the transaction occurs, that is the removal of goods occurs, or before that time, you have to raise a invoice. This is for goods which needs a movement. So when there is a movement is not involved, say you are constructing a building in a particular person's land and giving it, it is a supply. It is a supply, doesn't involve movement of goods. Say you can, instead of a building, you can say it is an erecting of a shed or erecting of a machinery. Doesn't involve any movement of goods per se, because the goods doesn't move. Those kind of transactions before or at the time of delivery of goods or making available to the recipient that goods. This is comprehensively they have defined. So when there is that particular item is made available to the person to whom you supply, at the time of that delivery of goods or making the available of the recipient, or before that time, the invoice has to be raised. The removal here, they means that the movement of goods arises only at the time of supply and not otherwise. So at the time of supply definition we saw previously. The removal here means the movement of goods arises only at the time of supply and not otherwise. So at the time of supply, the removal of goods happens, and when the removal of goods in the those two circumstances, you have to raise an invoice. And the CGST Act says what is the removal of goods means. Dispatched by supplier or any person acting in this law. So it has to be dispatched by the supplier or any other person acting on its behalf, and it should be collected by the recipient or any other person acting. So there should be a dispatch and collection. So both should be there for a removal of goods. Again, when it comes to continuous supply of goods, this is another circumstances. What is a continuous supply of goods? There may be some agreement between you and your customer which involve you to supply goods on a continuous basis, and you will be raising invoices at different stages. So what are all the ways in which the invoices has to be raised for those kind of transactions? Say section 31(4), which deals with the continuous supply of goods, says in case of continuous supply of goods where successive statement of account or successive payments are involved, the invoice shall be issued earliest of the following: when each statement is issued, when each payment is received. So when there is each statement, say you have been supplying 10, 20, 30 like that daily you are supplying. So you issue a statement on a every third day that previous 3 days I have supplied this much. So that is the time at which the statement is issued. Or so for every say 10, 20 or 30 like that you are going supplying. Intermediately, sorry, every fourth day or every week you get a payment, means every such payment is received. So for each statement issued and for each payment received, you have to raise an invoice. So you may have a contract for say invoice has to be raised at the end of the supply is being made. This is normally these kind of practices is being taking place in Middle East. Now they will issue a purchase order. Against the purchase order you have to supply. You can raise invoice only if you supply, if you complete the order, if you complete the purchase order, then only you can raise an invoice. This is what the prevailing practice in Middle East in most of the transactions. So when you have an agreement like that, the GST is not going to wait till you complete the transaction, that is the purchase order, then you raise an invoice. Because the tax has to be collected as and when the transaction appears, and the government machinery has to run. So what they say, when these kind of transactions, you may have any agreement with whatever way you act, but when you have to raise an invoice at these circumstances, say these two incidents, if it happens, say at the time of each statement, you issue a statement or the person has been marked a statement that this much, these two materials have been received, and he is making a part payment of those items, means these two circumstances. So these two circumstances, the GST Act has to raise a invoice. So for continuous supply of goods, you have to raise invoice on these two circumstances. What is continuous supply of goods means? It has been defined. A supply of goods which is provided or will be provided continuously or a recurring basis under a contract. You should have a contract and you should be continuously on recurring basis. It may not or may be by means of wire, cable, pipeline or other conduit. So there may be some, say, a transaction where you supply some services through internet, or so there may be some supply of it is also thinking of various items. Say there is an internet supply agreement, there is a cable for electricity supply. Don't just see electricity, it is something coming out of that purview of this discussion. So like that, there is a pipeline, you transfer any liquid items through pipelines, those kind of transactions, there is a continuous supply. There is some other conduit, say some other means by which you continuously supply. There is a supply of material or goods or something like that. That is what they are called as a continuous supply of goods. If the supplier sends invoice to the recipient on regular or a periodic basis as notified, the supplier or what you say, this is also a transaction where you go on supplying on a regular basis, you raise an invoice. So the supply may not be, there may not be a contract or a recurring basis or something like that, but you go on supplying on a regular basis, you raise an invoice, and then that is also called as a continuous supply of goods. So all these transactions are captured so that there is there is a proper clarity at the time at which the invoice has to rise and at what time the GST has to be collected and remitted to the government. Next, when it comes to tax invoice, when goods are sent on approval basis. So in case of goods sent on approval basis, the tax invoice should be issued at the earliest of the following. The time when it comes to know that supply has taken place. So at a particular time, you know that supply you have sent some goods on approval. Some oral confirmation is known, or in a general agreement, say after 1 day or 2 days that person doesn't respond, you have a general tendency that particular goods has been accepted by the recipient. Then at that time there is no transaction, there is no communication. But when in general terms, after 24 days the goods are what you send for approval, there is no communication, means it tends to be approved, that is tends to be accepted, means at that time. So time when it becomes known that supply has taken place. So this is what. So if you orally agree, the other person says I have accepted your goods, means then at that time the supply has taken place. You have to consider that time when it gets approved, when he gives the consent, or you say to the particular person you are sent goods on approval. After 2 days you call him and say that you have not replied on the whether you accepted the goods or not. I take it as approved, and if you say inform him, that is the time when it becomes the supply has taken place. So at that time, you have to raise an invoice. Next, you have not done anything. The other person also not accepted there is no regular contract between you. The regular transaction is in a way that there is no regularity in their acceptance. Say after 24 hours it is accepted. There is no such business parlance or business transaction like that, means. So anything is nothing is there for you to identify when the time it is known that it is supply has taken, means 6 months from the date of removal. So you have supplied and everything is silent. So if it is 6 months from the date of removal, it has become 6 months has elapsed, means that the day in which it is getting elapsed, you have to raise a tax invoice. So indefinitely you cannot keep on sending goods for approval, and you cannot defer the raising of tax invoices. This is what they wanted to arrest. So whenever you send there is in business, general business, there maybe you can send a goods for an approval, but that it cannot be kept for a long time. The government cannot keep waiting for you to remit the tax for a long time. So the utmost month time they have given a relaxation is 6 months. So if there is no approval or things in pending between you, 6 months after removal, you have to either raise an invoice or get the goods back to you. So this is what when the goods are sent on approval of sale or return basis. Tax invoice by recipient of supply of goods on reverse charge basis. So when there is a transaction with respect to reverse charge, when there is to be an invoice is to be raised, no, liability to pay on recipient of goods or services about instead of the supplier, it is covered under 9.3 and 5.3. There are two sections which cover 9.353 or section 9.4 and section 9.54 of the corresponding CGST and IGST Act. And the CGST, IGST, entire CGST, entire GST, when you call it as, there are three components you should have to understand: CGST, SGST, and IGST. CGST is a central act. IGST is CGST is central act on behalf of every state. IGST is the central act. You have an SGST act of the particular state. So all these, you have to read up together. Mostly, it will be replicated. So whatever there is in the CGST Act, corresponding section will be there in IGST Act and the SGST Act, and there may be slight variations. You have to read in consultant with both when you compare when you wanted to deal with the GST of a particular state. So there is a reverse charge on two types. There is two types of reverse charge mechanism. One is the reverse charge on a particular type of transaction, say lawyer's fees, advocate fees, we already said. The other transaction is with respect to purchases from unregistered dealers. This is at present it is kept in abeyance, but this is another leg of transaction. So when you encounter a transaction with respect to a specific type of items, that is coming under one type of reverse charge. Other thing is from purchase from unregistered dealer. In both these circumstances, when a tax invoice has to be raised, that has to be seen. General tax invoice for to be raised to the time to issue for services. We will see for services now. There is some lag in the screen now as such, so that I am keeping a break in my speech so that the screen is visible to you. Time to issue for services. A general rule for services is for prescribed time limit is 30 days from the supply of service. So 30 days is what the time given. It has to be given. We have to raise an invoice within 30 days. And in respect to issuance of service on a continuous supply basis, the same as continuous supply of goods, there is a continuous supply of services, like a AIMS contract or similar contracts with your maintenance contracts where you have a continuous supply of services. Supply of service which is to be provided and agreed to be provided on continuous requirement basis. This is the requirement. Under a contract, it should be under contract for a period exceeding 3 months. When there is a contract is for period exceeding less than 3 months period, or doesn't come under the continuous supply of service definition. With periodic payment obligation as mentioned in the contract, and it includes other supply of services as notified. So these are all the conditions for the continuous supply of services. So there should be a continuous supply of services agreed under a contract for a period exceeding 3 months. There should be a specific obligation mentioned in the contract for periodic payment, and it includes other supply of services as notified. So there may be some other supplies which may be notified for to be as a continuous supply of services. In case of continuous supply of services, issuance of tax invoice is dependent on the nature of the contract other than terms and conditions. So the contract which you entered in AIMS contract, you would have mentioned that every month maintenance has to be maintained, and after that maintenance, the payment will be released once. At the time of that particular completion of 1 month, you have to raise an invoice. That is the time at which the invoice has to be raised. And you may be, if this contract is silent and you have a clause which says that every month you have to send payment of that amount, means Whenever the payment is being made, no, then you have to raise an invoice. So depending upon the contract terms and conditions, the time of issue of service invoice will change. So these three circumstances are envisaged for continuous supply of services. Okay, one, where the due date of payment is ascertainable from the contract, the invoice shall be issued on or before the due date. This is what said. When you say there is no specific terms on which the contract has to be, the service has to be delivered, but payment terms has been mentioned, means that due date of payment, if the due date is ascertainable, for every month payment has to be made. You mentioned that words in the contract, means so every month end you have to raise an invoice on or before that due date of payment. So where the due date of payment is not ascertainable, you are not mentioned in the contract any due date of payment, then the invoice has to be issued before or at the time when the supplier or service receives the payment. So not mentioned the due date of payment, but you receive a payment from the particular supplier, that is particular customer, means then at the time or before that you have to raise an invoice. Where the payment is linked to the completion of an event, invoice shall be issued on or before the date of completion of, say, every month, I explained, every month 30th, you have to come for a maintenance contract. So every 30th, every month 30th, when he comes for that maintenance contract, on completion of that date, 30th, you have to raise an invoice. So these are the way you have to raise an invoice when it comes to continuous supply of services. Now we will see in manner of issuance of tax invoice, in how a tax invoice has to be issued. For goods, you have to issue in triplicate. So one is the original for the recipient, second is the transporter copy, third is the for the supplier. So your own copy, your own office copy is the third one. So whenever you raise a tax invoice, minimum it should be in 3. So one is for the recipient, original for the recipient, duplicate for transporter, and triplicate for supplier. You have to mention these particular words in the invoices so that it is easily identifiable. Previously, before the GST regime in excise, you would have colored copies of invoices. Each and every invoice, the original invoice should be on one color, transporter copy duplicate should be in another color, triplicate should be in another color. Like that, there were. Now it has been changed. Now you have mentioned original, duplicate, triplicate, and whenever there is an issue of any duplicate invoices which has been lost by the recipient who issue a duplicate invoice, you should specifically mention it is a duplicate invoice. You just like that, you have a computer and printer, you cannot go on printing the n number of copies as and which you wish. That should be avoided because that is not as per law. The law specifically says how you should raise an invoice in manner in which you have to issue a tax invoice. With respect to services, it is two duplicate you have to issue. One is for the recipient and one is for your supplier, that is the office copy. And tax invoice contents. So you raise a tax invoice, what it should contain, what are the details it should contain. Name, address, and GST of supplier. This is your own name, address, and GST. Of course, that should be available in the invoice. And the invoice number should be serially numbered, less than 16 characters. Remember, this less than 16 characters should be, because the GST website or all other any softwares, they can only capture 16 characters. So your invoice should not exceed 16 characters. It can be one or multiple series. Say you have the same premises, you raise two set of invoices for your convenience purposes. Say you deal with two type of goods, you can raise two series of invoices. But this should be, you should be reporting this invoice series in your GSTR returns. Monthly returns, you have to mention what are the GSTR series invoices you are raising and the GST numbers, the invoice numbers which you raise on those particular series. That should be reported when you furnish the monthly returns. You can have one or multiple series. You can have alphabet, numbers, special characters combined, and it should be distinct for each year. This distinct for each year, you should remember, because GST and website will not accept an invoice number which is available in the previous year. So whatever the invoices, normally what we do in regular parlance is we affix the financial year. Say for 1920 we affix 1920 as suffix or prefix. Similarly for 2021 financial year we mention 2021 as a prefix or suffix, so that the invoice number become unique. So it should be distinct for each year. And next you have to mention the date, the name and address of the address and GSTN of the receiver. GSTN is the GSTN number. Tax invoice, other contents, name and address of delivery, the address to which the items is delivered. There may be the supplier, no, or the customer address, the correspondent address, what the registered address, and the premises to which you supply may be different. So you have to mention both the addresses, and if it is different from any other state, no, they know to see what is the tax incident, because the supplier, the tax rate, that is the CGST, SGST or the IGST, depends upon the destination. This GST is a destination based taxation. So depending upon the state to which you supply, whether CGST, SGST or IGST will occur, so that you have to carefully in raising invoices and see the appropriate rule, whether you write a CGST, SGST invoice or an IGST according to the place of supply. Next is the HSN. The HSN, the harmonic system of nomenclature, which has been universally accepted. We have a code which has been for each and every type of goods and services, that you have to mention in the, and what is the, how to mention, you will see what are the requirements with respect to HSN in the coming slides. And with that HSN, you have to mention the description of goods or services, the quantity, total value of the supply, rate of tax, taxable value of supply, amount of tax on taxable supply, value of supply, place of supply along with the state and name, reverse charge or whether the invoice subject to reverse charge or not, signature, which is physically or digital signature. So all these things should be mentioned available in the tax invoice. So with respect to HSN code, so these are all the rules which have been mentioned by the GST authorities as such. Up to 1.5 crores turnover, you need not mention the HSN code. From 1.5 crore to 5 crore, you can just mention the 2-digit HSN code. More than 5 crores, turnover, they have mentioned the 4-digit HSN code. The HSN code comprises of 8 digits. The 4 digits will easily you can identify. The other 4 digits are sub-component or sub items of the particular 4-digit HSN items. If you wanted to read more about HSN codification, you can Google it out and find out what is HSN, how it has been named, how it is universally accepted. This similar HSN code is throughout the universe, throughout the world. They follow the same nomenclature. So that for a particular item is distinguishable based on the HSN code. So you may call it in a different name. The description may change from country to country, but the code will be similar, so that the taxation, there is no confusion in taxation when there is a transaction between cross-border trade. Tax invoice revision. Can we revise a tax invoice? In GST, there is no concept of revision. There is only amendments which you can do by some other document. So for any tax invoice revision, you can either raise a debit or credit note. So Rule 53(1), which talks about revision invoice, is applicable only for dealers who register for first time and for invoice raised between date of application and date of granting of registration. I have told multiple times there is no revision of tax invoice, but there is a rule talks about the revised tax invoice or the tax invoice revision. Yesterday when you heard about the registration process, you would have heard that Shankar sir has been explaining that at one point when your threshold limit of the taxation exceeds, within 30 days you have to get registered in the GST. So when you apply for registration, there is a time lag between applying for registration and getting it registered. So your threshold limit getting increased, that is getting the exempted limit, it is getting increased on a particular date. On the date you apply for registration and you get registered after 10 days or 15 days. So whatever the invoices you raise between that 10 days, the provision there is for revision of tax invoice. Excuse me. Your compliance as per GST law is there is no lack. So as soon as the threshold is increased, you go opt for registration, and within that 30 days you opt for registration, and you should be given benefit of the various aspect of registered taxpayer. So when you apply within that, no, you can take a tax credit. Yesterday Shankar sir explained that if you apply within that time limit which they have given, no, then you can avail the input tax credit which is being for the supplies during the intermediate period, that is between the application and the time of getting the approval. Normally when you apply on those circumstances, the registration is granted from the date of your application. So whatever input tax credit purchases you made on those 10 days, that is between the application and the grant of registration, you can take the credit. Similarly for invoices you raised, so there should be business continuity. So it doesn't mean the business stops from the date your threshold increases. When the threshold increases, you apply for registration, you go on continuing a transaction, you go on making supplies. And for those supplies, actually you would have supplied a tax invoice and you should have collected the GST. Since you have not got a GST number, you have raised a regular invoice for 10 days. Those regular invoice which you raised between the date of application and the date of grant of your registration, no, those invoices you can revise. That is what the revision of tax invoices mentioned in Rule 53.1. This is the only circumstances at which you can revise an invoice. For other purposes, there is no revision concept. You have to either raise a debit note or credit note to nullify or to regularize the mistakes that have been committed in the regular tax invoice. This is a sample format of GST invoice generated from Tally. This you can see the tax invoice structure, which has contains the various aspects. This buyer, the seller's item, name and GST numbers. I have just hidden the identity of the persons. And this is what it appears: the name, address, GST number, the invoice number, date, supplier references number, purchase order number, buyer's order number, dispatch document if you have been dispatched through any other dispatch document number for which subsequently you raise invoice. The description of item, you can see the HSN code, quantity, rate, any discount, amount, the various GST components, and the for this you have a separate table HSN wise the GST component here. The Tally, this is has to be mentioned, because here you have not mentioned the HSN wise tax component. You have separately capturing that item, because these two are the same HSN. For HSN wise you are capturing in the subsequent table in the same invoice. HSN wise what are all the taxable value, what are the tax component of the various tax components. And this is the sample tax invoice raised in Tally. Again, now coming to the debit notes and credit notes. These documents or records are the foremost things, and so multiple times I have given at various instances the what are the documents. I have explained about it. Again, I am explaining what is a debit note and credit note. A debit note to be raised when the value declared in invoice is less than actual value, or the rate of GST or tax charge is less than the actual. So these are the two circumstances when the debit note has to be raised. So when there is any change in the invoice value, that is the original taxable value, which is less than the actual value. So you have raised at a lesser value means you can able to raise a debit note. It is a vice versa when it comes to credit note. So when there is a value declared in the invoice is greater than the actual value, or the rate of GST or tax charge is greater than actual, then you raise a credit note. Apart from this, what other circumstances you raise a credit notice. Quantity received by recipient is less than invoice quantity. So you have supplied on goods which has been received by the other party less than that invoice quantity means then you raise a credit note. Similarly, for the goods returned, goods when you return a goods, no, you raise a credit note. These are all the circumstances in which a credit note can be raised. Debit notes and credit notes, and again iterating that in normal commercial parlance, what the debit note and credit note means is something slightly different when it comes to GST. So kindly understand this very clearly. In regular parlance, there may be now most of the industry is tuned with the GST. There are circumstances when you use a commercial, you will raise a commercial debit note or a commercial credit note. There are clarifications issued by the GST department with respect to those commercial GST debit, non-GST debit notes and credit notes. You can read those things, but it is in normal business circumstances, those things are not being used in extraordinary circumstances. So for general understanding, this general debit note and credit note is what has been now raised by most of the business houses. This you have to understand. So for a debit note, the invoice value or the tax value, either the invoice value or the tax value or the tax rate. Tax rate is changing, the tax value will also change. If it is less than the actual, then you have to raise a debit note. If it is greater than the actual, you have to raise a credit note. Other two circumstances for credit note is if it is the quantity received by when you supply a goods and the quantity received by the other party is lesser than that, then you raise a credit note. Then when you return a invoice, you purchase some item, but the goods you get return it back, then you raise a credit note. This is nothing but a rejection invoice. That has been called as a credit note. Now we shall come to receipt voucher. Receipt voucher is nothing but the voucher, the advance for supply. This is what we call when we talked about the advance register. This is what the register, this is what the document which has been summarized in the advance register. So whenever a supplier receives advance, he has to issue a receipt voucher. And the tax on the receipt voucher can be adjusted upon invoice generation. This we have talked about elaborately. The format mentioned in the receipt voucher is almost similar with that of invoice format. So except that the particulars of items will not be there, but all other items what is mentioned in the invoice it will capture. The HSN or the item description, whether the item based thing will not be available, but all other items which are appearing in the invoice will be captured in a receipt voucher. Refund voucher, it is the reverse of the receipt voucher. Advance for supply refunded. So when a supplier refunds the received advance, the refund voucher is given, and the GST paid can be claimed as refund with RFT01. This is a peculiar transaction, so they wanted to find out whether there is a genuinity of the transaction in this particular kind of advances getting refunded. So we have to claim that refund via the RFT01. You just cannot adjust as a regular ITC. Next, delivery challan. So we have seen the delivery challan. Again, we am explaining at times of supply of liquid gas or supply of job work. There is a branch transfer within the state and other supply notified, the delivery challan has to be issued. And we have to check this rule 138 which has to be adhered to it when it is delivery challan. With respect to job work DCs, a separate GST ITC 04 return has to be filed. This is to capture the various aspects of delivery. When we send the item to job work, that job work item may be get returned at a different time, so depending upon the type of job work. At times the job work may take 1 month, 6 months, or 1 year, or 2 years, like that. Differently it may take, depending. But there is various notifications and various rules have mentioned that there is a prolonged day, return due date is being mentioned. There is a job work taking so much time, that is, it takes 6 months or more, like that. No? You have a separate rule which mentioned when to raise a invoice for those kind of delivery channels. Now you cannot keep on shifting the time. So the what all the items which have been supplied by delivery channel to be traceable, and it should be invoiced in a particular time. So they have to give that particulars in a separate return called GST ITC 04. And again, when it comes to payment voucher, the payment voucher is for the RCM. If you have seen that for advocates and other kind of payments what you have received, you have to receive a payment voucher. This is also in the same format in line with the tax invoice, and you have to check the various requirements of tax invoice and what all the components which is not applicable for payment voucher. That test can be mostly this payment voucher will contain the unlike a receipt voucher or the refund voucher. The payment voucher will have the item description also, because it is a reverse charge mechanism. So you will have the HSN and the item description for which you have received an invoice. Whatever invoices you have received for which on a RCM basis, that invoice details should be captured in the payment voucher. Now we have seen the books to be maintained in 3 parts. Now we will come to the last part, the records maintained by GST. What are all the records maintained by GST? These are the records which gets consolidated by the books maintained by GST. When it comes to GST, there is 2 records, which is the e-invoice and the e-way bill. E-invoice is a nascent stage, and e-way bill is somewhat it is getting matured. We are not going in depth into the e-invoice and e-way bill. It's been separately handled. So I will just give an overlook on what is an e-invoice and what is an e-way bill. For e-invoicing, register at e-invoicing portal. It is available for 500 crore and above. It is on testing basis for 100 to 500 crores. E-invoicing, the word whenever one comes to its mind, no, something should not get carried away. That invoice has to be raised in the GSTN portal or any other portal where e-invoice is to be generated. It is not like that. No, you have to upload the invoice particulars. What is the invoice you are going to raise? No, you have to raise an invoice particulars to the particular website, the e-invoicing portal website, and the particular invoice gets recorded in the portal, and the system will generate a QR code, quick response code. You have seen in Aadhaar card and other places where the QR code is mentioned. It is a quick response code. For the particular invoice, they will generate a separate, that is a unique QR code, which you have to mandatorily print in your invoice that you are going to generate it. So this is how the e-invoicing happens. So once this e-invoicing, let's know there is the possibility of the invoices not getting recorded, not reported in the GST returns getting and that kind of things is not been avoided. So whenever the e-invoice is raised, no, it has been foolproof. So it has been recorded in the GST and it has been issued. So there is a complete clarity or complete conclusion in the transaction. It has been done. That is, that particular sale has been made or the particular supply has been made. Before going to this presumption law documents, we will talk about e-way bill. Just I'm giving you an explanation what is an e-way bill. E-way bill is nothing but when you study the way the business transaction, the supply is made, no. Normally what it will, whenever a supply is going to be prepared, no, what they will do, they will raise a delivery challan. Delivery challan will contain all the descriptive items. That is item based, line wise, it will have all the things, what is the quantity and other particulars will be there. That is captured in the delivery challan. That will be accompanied by an invoice, which will only have the commercial parlance and or the value and value based things to be captured. This was the procedure which was followed internationally before this VAT or the GST kind of regime came into existence in the business parlance in the various countries. Now what they say, they raise an invoice come delivery challan is what called in the excise regime. Now they call only the tax invoice. There is no delivery challan concept. You can raise delivery challan only at a certain type of transaction which we saw earlier. So for the movement of goods, so this tax invoice has to be related with the movement of goods. So what they do now, whenever there is a movement of goods, that movement of goods has to be sanctified and it has to be recorded properly. So they introduced a concept called e-waybill. So what you do now, whenever you intend to move or when you start moving the goods through a transporter, so there is some specific requirement that is required for raising the e-waybill. The value should be say more than 50,000. It should move in a motor vehicle like that. There are some e-waybill rules and regulations are there. I'm not going into those things. This when you move goods, you raise an invoice, and you are going to transport it through a lorry from say Chennai to Coimbatore. So from Chennai to Coimbatore, when you're going to transport, you have to generate a e-waybill in the e-waybill portal. So what you do in the e-waybill portal, you key in the particulars of this invoice along with the transporter details, that is the lorry number in which you are going to transport it, the date and time of transportation and other particulars which is being then captured. This e-waybill is generated and this invoice and e-waybill will move along with the goods and it will go to the destination. So the movement of goods from the start point to end point is captured by the GST department. So the purpose of this is there should not be any escape of taxation just by movement of goods. So there should not be any exchange of invoices without movement of goods. Both these kind of transactions to be stopped or to be eradicated. That is the principle behind of this e-waybill. We will see the e-waybill in the later session coming days and in in-depth fashion. So next comes to presumption to document under section 124. Why we talked about the books and records so elaborately? We have a separate session. Why? What is books and records? We are going raising an invoice. We are going to anyway. We are going to write it down. You have to keep all these things. What make the significance of these things? I already told whatever the GST compliance you make, the books and records is going to only vouch for your compliance level. Similarly, the section 144 which says these documents are the evidences for your prosecution or any non-prosecution or anything. These documents become an evidence. So these books and records or documents are so important. These are all the evidences for the transaction which you undertake under GST. So in 144 what they say is any document produced by prosecution as evidence is presumption to documents. Whatever the documents is produced becomes an evidence, and any produced, seized, received from outside India, this becomes an evidence unless proved contrary. So unless you prove that it is wrong or it is not the documents which is created are not by yourself, it is bogus by somebody else, unless it is proved, it is become an evidence. It is accepted as such with regards to content, signature, attestation, whatever if you have done, whatever the evidence it has been, whatever the documents and records which you have created, they are accepted as such. As such, the contents and signature, because that is why I mentioned you, whatever you have, documents and records, it should be properly recorded and it should be properly authenticated. Because if you later on know, in one invoice numbers are after the particular seizure has happened, somebody has seized your document or some document has been found to be wrong, then you cannot say that this particular item I have wrongly mentioned. Because whatever you have mentioned in the document, it seems to be right and it has taken as an evidence as such. So later on, you cannot object that the particular item has been wrongly given or wrongly posted or wrongly written or such kind of explanation you cannot give. So this books and records gets importance due to these various presumptive assumptions which is mentioned in section 124. So whenever the document is generated, it will be perfect in all respects. Whenever you find out there is an error or find out mistakes, you rectify that mistakes immediately on finding out through any debit note or credit note or corresponding entries in the various ledgers, that is the various returns you file with the GST department or with any intimation to the GST authorities that it has been wrongly mentioned. You have to intimate or rectify that immediately on finding out those things. The best thing is you have to be alert and seeing to that there no mistakes happens at the inception or the time of generation of the document itself. And what are the types of document accepted? What are the type of thing accepted under section 141? Whatever the details being asked for when it comes to appeals, revisions, and other particulars, when you will find out all the documents that may be called for by the department. When it comes for assessment, say in regular assessment, they may ask for the various documents. What are the type in which they may ask for? They may ask for you in microfilm. Most of you do not heard about microfilm, facsimile copies, all these are redundant, but two things, but it has been mentioned, we keep that. Computer printouts, whatever they may ask for computer printouts. They may ask for soft copies stored in any electronic media or device, and they may ask you to get it duly certified as an evidence. Sometimes they may ask you to get that whatever invoice copy it has been, they will ask for a copy of the, you say, a photocopy of the particular document. They may get ask you to certify as an evidence so that can be submitted for them. So these are all the various ways in which they can ask for your document to be submitted for any assessment or any prosecution or any pending cases with the department. And now we have completed the as such the what is the documents and records, books and records that has been mentioned in the GST law. And then we will come to the transaction recording process. This is the utmost important when it comes to people who enter the industry after completing their studies. So what they study is something theoretical. When it comes to practical, these are all the things they have to keep in mind. This transaction recording, how this transaction has been recorded, how it is been getting things done. You have to get a clarity on that so that you will be able to understand the entire business as such. First, purchase and sales. We'll start from purchase and sales. The purchase is what the expenses. We call that as an expense, or it comes under the expense side. Sales, this comes under the income side. So how you account a purchase and account a sale. I'm not going into other transactions, other expenses and income transactions, and confining with the GST transaction alone. So you can relate with other transactions, other expenses and other incomes not pertaining to purchase sales. You can relate with those things also. I am only confined to GST transactions. The purchase comes under the expenses side, the sales comes under the income sides. In purchase transaction, you have the purchase value, the GST component. So when it comes to the GST component, the purchase component goes to the expenses side. The GST component, GST is what the credit you are going to pay. Since it is a credit you are going to pay, it is an asset for you. So it will come under the current asset. So similarly, when it comes to sales, the sale value or the invoice, the item value will go to your income. The GST collected amount is a liability. So you are collecting on from your customer and you are going to pay to the government. So that is a liability. So it will come under the current liability. So the different portion. So in purchase invoice, the GST portion comes to current asset. In sales, the GST portion comes to the current liability. The current liability GST minus the current liability GST, current asset GST, is what the difference amount of GST which you are going to pay as a cash. So whatever the business transaction, you can see only the GST you are going to pay is only for the value addition. So this is why the GST is a value added tax. The value added, the purchases you have, it is for the same item. Say you are trading in a particular item. Say you are buy a pen for 10 rupees. The GST component is 1 rupee. So purchase is accounted, 10 rupees is accounted in expenses. This 1 rupee is a current asset, you kept as a current asset. Sale, you make the same, sell the same pen for 11 rupees and you collect a GST for 2 rupees. This 11 rupees will come to the income portion. This 2 rupees GST will come to the liability portion. This 2 minus 1 will be the 1 rupee you are going to pay to the as GST cash payment. So I am giving 1 and 2, that is, it will not come like 1 and 2, it will be 1 and 1.1 like that. It will be when it comes to 10%, it will be 1 and 1.1. For a simplicity, I have taken 1 and 2 an example. So whatever the value addition, so you are having a margin of say 10% means the 10%, say it is the taxable value, the tax rate for the particular item is 12% means 10% on the 12%, that is 1.2% only we will pay in cash. That is what the value added tax. So most of the people, most of the business persons now have a mindset that I have collect GST from my customer, I should pay from my pocket. That is what the general tendency of most of the business people. So whoever trade or whoever manufacture, whenever they do a transaction in GST, they are going to pay only for the value addition in which they make on the particular item. What is the margin they pay? That is what they are going to pay. What they collect, what they pay to the purchaser, less, that is what you are doing. That is what the transaction record. So in this current asset and current liability, you have to maintain separate ledger for liability and asset and separate for each percentage. Say you are collecting, you are paying GST, SGST 6%, CGST 6% means you have to maintain two current asset register for current 6% and 6% for CGST and SGST. Similarly for IGST. Similarly for liability, for each percentage you have to maintain a separate register. At the time of the month end, say month end you are going to discharge the liability by way of filing GST or 3B, you are offsetting this. The liability you are offsetting against the credit available, that is the current asset. The corresponding entries you have to pass corresponding journals. The net liability which is going to pay you trust to come to the current say GST payable ledger, which you keep it in current liability, that you have to pay through cash or bank, mostly bank. That will be get discharged through bank payment. This is how you have to record the GST transaction, the purchase and sales for the current liability and income. Not only on purchase and sales, GST is applicable on expense and income also. So just I have taken the purchase and sale example. It doesn't mean, even there may be some expenses and income where there is a GST input credit will be there and output credit liability will be there. So wherever there is an expenses, say you for lawyer fees or auditor fees, you it is an expense item for your business, but the GST component you can take credit. The same principle will apply for the current asset, current liability creation will apply for the same that transaction also. The net liability will only you have to pay. So in case of pure trading concern which doesn't have any expenses, only the margin will be the tax rate on the margin will be the GST paid. And if you have any other expenses which are for which you have paid GST, that also you will take it. Say rent you have paid some GST, you have on a rental premises, for that you have paid rent along with GST. That GST also you can take credit. Apart from this, for capital goods, you find buy a machinery, there is a GST component. That also you can take credit. So only for transaction, purchase recording and expense recording, I am just explaining you this. Even if you record for a fixed asset, which you bought, there is a GST component, you are taking credit. That fixed asset, the gross value will go to the fixed asset item, that is the less of GST. The GST component will come to the current asset. So that is how you code a transaction with respect to in a GST ledgers. And next thing which you have to keep in mind is read the rules. Whatever you have to read the law, which is the prime most. Next, read the rules. All the rules which is pertaining to various transactions. There are various GST rules with respect to invoicing, with respect to bookkeeping, with respect to various aspects. There is GST has defined rules. Kindly go to the rules. The rules are amended, and also read the notification corresponding to the particular rules, and apply the respect with respect to the business. You should understand the business and apply the requirements. And in invoice numbering, this is one other thing which I wanted to reiterate. You have to be uniform throughout the year, and check for special characters and length. I already said 16 digits should be there, not more than 16 digits. And whenever there is you are going to file a return, kindly have a monthly summary and verify it before it is being filed. So this is what most of the thing you have to mean. Whatever the returns you file, you should have a back backup. So whatever the returns you file, that is why they have asked you to maintain books and records. So whatever the returns you filed is except the sales, that is the GSTR1 where you give the sales breakup. All other places you give only summary. So you have to maintain the details of those summary. So you have to, for every month, you should keep what all the summary which are filed, the details of which in a separate folder. Whenever you in a computer you can keep create a separate folder and have a copy of that particular record itself. You can have multiple records. The original place is where the original records is maintained. Monthly returns filed you can copy and paste the particular records in the particular month return folder, so that you have the backup of the return filed with the department. And properly file the document, both physical and electronic. You have to properly file the document. This is utmost importance, because whenever there is an assessment or whenever there are verifications, all these documents, say invoice copies, the purchase invoice copies, that is the tax invoice copy should be there. That is the copy in which you take the credit. So you should have the original invoice copies with you. Similarly, whatever the supply invoices, that is the sale invoices you make, you should have the copy. That is the supplier copy of the particular invoices. That is the third copy, triplicate copy you should have and file with your in a proper manner. And with respect to specifically with the purchase invoice, get it arranged in a month wise, and so that the verification can be done easily. And with respect to monthly reconciliation with GSTR2A, GSTR2A is nothing but whatever sales transaction we make, we file a return called GSTR1. We will mention the GST and number of the person who purchased from us. So that person's in his GST website, our invoice will go and sit in the GSTR2A. Similarly, whatever purchases we make from our for the raw materials or any purchases we make, that person will file a GSTR1, and those credits, the GST payment we made on the particular invoices, it will come and sit in the GSTR2A. So what we have to do now, whatever it is coming under 2A is what now they are making it mandatory that for taking credit, 2A should be, the credit should be available in 2A. This is in line with the 26 AS in income tax, where we will get a credit in for the TDS, the tax deducted by the your employer. When you work with any company, the employer will deduct income tax on your salary. That will come and sit in the 26 AS. Similarly, the purchases, whatever you make purchases, the GST credit will come under GSTR2A. That you have to reconcile with the purchases what you recorded in your accounts. This has to be done monthly wise, and this you can have that it's done in Excel. You can learn it in Excel, or you can get the support of some softwares which is available also. So to learn Excel very well, now you can have this GSTR2A reconcile on monthly basis. This is most important, because whatever the credit availed, it has to match with the GSTR2A. So any credit, if it is not been reflected in GSTR2A, you can follow up with the purchaser, so that you will file the return and you will get the credit. And this input tax credit what is taken on 3B and the GSTR2A and the purchases has to be backed, and all the credits what you have taken, the invoices copy should be available with you. This is why the invoices to be filed month wise, which I mentioned earlier. So your 3B, whatever input take a credit taken should be backed by the invoice copies. So without invoice copy, if you take the GST or 3B, it is an offense, and the penal and prosecution and other sections will apply. So be sure that whatever the 3B credit what you take is backed by the original invoice copies with you. The input credit taken, output liability should be properly accounted as per GST or 3B. This is why now, whenever you file a 3B return, corresponding entries in 3B, what you do now, you liability you offset with the asset, that is current liability, what is said GST collected, you offset with the GST credit available, then pay the net liability. So this credit offset account should be properly accounted in your books of account also. Normally most of the business people, what they do, they don't record on a month-on-month basis, they shift the entries to the year-end basis. On year-end basis you get confused with so many transactions that has been taken place. So it is almost as per the GST, the monthly return what you filed should tally with the books of accounts. That is also a requirement. You have to pass these entries, these offsetting entries, GST credit which you offset against your GST liability should be made on month basis, so that your monthly ledger balances of the GST accounts should match with the GST and website ledger copies. So this everybody should keep in mind. This is most of the business also tend to be a lenient, take a lenient view on this, but be strict to that, pass on a month basis. Again, another thing, when it comes to transaction regarding, most of the businesses tend to lose is, this input credit what you avail, that is input tax credit ledger, you have to get it distinction between raw material, traded goods, consumable, expenses, etc. So whatever the, you can in GST, whatever the input what you use, you can use it as that credit, you can use the GST paid on that input, you can use as a credit for the output, that is the GST liability you going to discharge. So this input credit may be for on raw material, maybe on traded goods, maybe on consumable item, maybe on expenses. So in a trading, profit, manufacturing, trading and profit and loss account, these expenses may fall at different categories. You have to maintain the input credit availed on various categories separately, so that at a later point it is available. Because in GST or 9C, when it comes to audit under the GST for certain kind of, say, high value 2 crore and above valued registered dealers, this kind of breakup has to be given. Some relaxation has been given for the 2018-19 financial years and all, but it is mandatory to mention in after years in 2020 and all. So it is always better you design your accounting system such way this input credit. It is already available. Whenever you file a 3B, you will get the detail. When you file a 3B, whatever GST or credit you take, if you are able to get the summary from the detail which you have prepared, then in the detail you will have the distinguished items, that is whether it is raw material, traded or consumable, you can get it. When you do this at a year end only, then it will be a very difficult process to bifurcate this. On a month basis, if you do this, the transaction recording will get it completed. So whatever the books and records which we discussed as such, gets completed, gets a wholesome view when you follow this transaction accounting process. This I can elaborate for hours together, but going to be stepping into the industry as an accountant or as a person who is going to supervise an accountant, this accounting transactions to be very clear. You should be very clear in the transactions, how to be recorded under GST, so that the GST compliance as such is proper. And by this I complete my presentation on books and records and the documents. Any questions you can be feel to ask now. Madam, any questions?
Yes, sir. If they post in the YouTube, we'll convey you, sir.
Yeah.
Yes, sir. Yes, sir. Still now, no questions, sir, since the sessions were so interesting. They were only listening to your sessions.
Well, they have to listen and digest the questions. There may be persons who have been practicing, there may be persons who know already GST. For those persons, the questions may arise. For new comers and new listeners, no, you have to learn this and digest, then we'll get the questions. Um, Per se, no, they will be seeing something which is in a blind eyes they will see. Once they get into the transaction, they will come out with various questions. So it is always advisable for any person, even experts also go on reading this continuously, So different dimensions they will get and at the time of learning at a different stages. So over the new readers, my kind request is for them to read this law again and again. Any law or anything, any subject, if you read again and again, you get different dimension and you get expertise on that particular subject.
Sir, there is one question, sir.
Yes, ma'am.
Due to digitalized accounting procedures growing today, don't you think maintaining records is become feasible?
What is maintenance record? It is, when you talk about maintenance of record, our mind gets freezed with respect to physical things. That is not the thing. Whatever it is been in digital manner, there may be things which you manually digitize a transaction. There may be at times it is being automated. So the automated transaction doesn't digitize doesn't mean that recording of transaction is not happened. Say a particular thing. So whenever I purchase a particular item from say a website, that invoice is getting posted in my accounts. I am not entering it. That invoice come through email or some other means and getting posted in my books of accounts. So there are various accounting softwares now, they capture based on the invoices from emails also, they capture transaction from our bank statement also. That doesn't mean that transaction is not record or there is significance of maintaining the transaction doesn't have. It is only getting automated. You need not post the transaction, you need not punch the transaction, but it is a digitized manner, and you should see to that the various requirement under the various law on the particular transaction is abide by. Mostly when you go with the bigger software vendors, they see to it all these compliances at a back end. So when we use those softwares, we will not come across situation where all the requirements, we don't check whether all requirements are being kept upon, because those are being dealt with by the software vendors. And mostly, that is what we have to see. Whether in our business, as required by law, the transaction automatically digitized is as per the law. That has to be. Though there is a significant, your workload may get, but as such, you have to check the correctness and appropriateness of the particular transaction on a regular. That also you can automate. You can also automate the checking process also. Only the way it changes.
Okay, sir. So there's another question, sir. Is it not enough if we maintain accurately the books in Tally to comply with the guidelines of the Act? Has Tally, a member of GST body, amends in sync with the Council? Has most MSMEs used Tally?
No. Tally is a tool in which you record a transaction. Now, for simplicity, I will say I have purchase register, sales register, my cash book, bank book, all thing I have in manual. Everything is there. In purchase register, I have omitted to enter one purchase. It doesn't mean that I have complied everything. If I have omitted something, I have not complied with that. Similarly, when you use Tally, it doesn't mean that it is being complied with it. The punching of data in Tally, when you enter purchase entries, you can enter without entering the GST component also. Just purchase account data to creditor account you can enter. But GST asks you to enter what you say. If you take an input credit on purchase, how you have to enter? You have to enter purchase account, GST credit account to creditor account. So if you wrongly post, the Tally doesn't vouch for it. Only thing is, whenever there is a preparation of return, even when it comes to GST return preparation using Tally, there are various parameters which has to be complied with. So you have to enter the proper HSN code, you have to select the proper GST ledger, you have to select the proper GST rate. All these configuration you have to do. Tally doesn't for you. It is giving you a platform to do it. Once you have do, one time you will do it, gets automated. So the first time you do, and the transaction, every transaction you record, if you properly record, no, then it will take care. So that kind of compliance is required. So as such, no, the formats and other things have been prescribed, and they are getting it amended as required by the GST law. That doesn't mean it complies with it. Certain changes you have to make modification in the entry you make. So that you have to take care when you use Tally. So Tally is comprehensively gives you for MSMEs a flexibility in accounting and the quickness in accounting. You have to see to that what you account, what you enter in Tally is appropriate and proper.
Okay, sir. So what is the period of maintenance under section 26?
The period of maintenance, as I explained, I have already said, no, it is 72 months from you have to maintain the books and records for other than any prosecution or any other thing. That is from the date of annual return, the last date of annual return, the time, the due date of annual return. From the due date of annual return, you have to maintain for 72 months. For when it comes for assessment or any other thing which is pending, it is 1 more year. If it is 72 months has elapsed, it is 1 more year. If it is 72 months has not elapsed, it is 72 months. It is what the requirement of keeping the books of accounts.
Okay, sir. So how many days validity of sales GST amount and purchase GST amount for missing of GST return time?
No, sales, no, asset, you have to, the liability you have to be reported in the month in which it has been transacted. So committed to book the liability. The subsequent month 3B GSTR1 has to be properly given. The subsequent month you will be able to identify and you have to give it. You cannot prolong it. This GST 3B discharging of the liability to 3B, no, it has to be done on a month-on-month basis. And with respect to purchases, now when you omitted to take a GST into credit, only it is only available from the end of the month, 6 months from the end of the financial year. Say 31st March it is ending, up to 30th September or the end of or the due date of filing annual return. There is some dispute been going on with that particular annual return, because annual return date is getting extended. No, normally 6 months you take it as 6 months elapsed. No, so March, no, if it is March means 30th September, within 6 months you have to take the credit, otherwise that credit get elapsed.
Sir, அதுக்குள்ள இத முடியும் எட் ஆயிடுச்சு சார் போட்டுருக்கோம்.
This is for March and other transactions. For you cannot go on extending this credit beyond 6 months. You should account it within that period. Otherwise, you will lose that GST credit.
6 hours and 10 minutes fast, sir. 6 or 10 minutes alone.
Okay, sir. So why GST is current asset or current liability is not applicable to all the business houses?
I can't get you properly. Now, when the GST, whatever I understood by the question I am explaining, GST credit, when the credit is eligible for you, if it is an eligible credit, then you take the eligible credit in offsetting your liability. So when you are eligible to take a credit, it is a current asset. So whatever the current liabilities, that is liability, that is what GST or collector, you are going to offset it. When there is a no eligible, that particular credit is not eligible, then particular credit will not be a current asset, it will become an expense item. So this is why the current asset may become an expenses for non-eligible credits. Non-eligible credits you cannot take it as a credit, so it will not come under current asset. What is the credit available for offset against the GST liability only can be taken to the current asset. Say some staff welfare expenses you are incurring. Say you are purchasing some food items for a staff welfare. No, that is not ineligible. There is ineligible credit. You have a GST bill, GST proper GST bill. You have that GST component. What is there? No, you cannot take credit. So that is not, that GST item you will not take into current asset. That will be accounted in the expenses itself. This is based on the explanation of the question. If it is, can be elaborated, I can explain you more.
Okay, sir. Sir, what is CRM? Can you explain few examples of CRM, sir? I mean RCM, sir, reverse charge mechanism.
This RCM is something which is more and more people are asking about what is an RCM. Reverse charge, normally GST, you collect the person who is selling the item or supplying the item. So I use selling, the word selling, to get used to it, because we used to use the word sale. That is why I'm using, but in GST normally the word is supply. So the person who is making a supply, that is outward supply, we call it an outward supply, is the person who will discharge the liability. That you will collect the GST and pay the GST. When you collect the GST, whatever the, similarly you would have paid GST to somebody else. The GST law, since it's a value added tax, whatever the GST is collected, he will offset with the GST he has paid, the difference only he will pay. So that he is not burdened with the, he is only burdened with the, he will pay only to the value addition of the GST component. So when it comes to transactions of certain nature, it is difficult for the persons, that is the persons who are making the transactions, to give a proper GST bill and get it pass on the GST, that is value added component process, the chain goes on. That kind of thing, certain transactions the government thought it is very difficult to maintain. So those transactions, say a transporter, he may be of a small person, or he may be of that kind of nature of the businesses like that, he will not be able to write a proper GST invoice, and that transaction is not getting recorded properly, and there will be some revenue loss on this. To curb those process, what they did, in kinds of transporters, in kinds of security persons, supply of security persons, lawyers, and certain transactions, what they have done, I will come to another type of RCM later. These kind of transaction, what they do, they supply, those persons will not give you a tax invoice. They will not collect GST from you. They will only collect the services, the value of further services. What you have to do, you will account that in your purchase or in your expenses. So when you account such kind of transactions, what you do, on those transactions, you pay GST from your pocket. So why should I pay from my pocket? Otherwise, if the persons were registered, a regular purchase, other registered person, what you do, that GST of component also you will pay to the other person. Now what the government does, instead of paying the GST component to the other person, you pay from your pocket in your GST number, you pay as your GST cash ledger. Since you can take credit on GST purchases in a regular transaction, similarly for these kind of transaction, when you pay from your pocket, you, after paying that, you can take credit. This is reverse charge. In regular charge, what you do, you pay the GST amount to your purchaser. From whom you purchase, you pay the GST amount and take credit in your ledger. In reverse charge, you yourself pay in your own account, in the GST account, in your GST cash ledger you pay, you take credit. This is what reverse charge. So this transaction is in reverse of the transaction. So normally what you do, for the GST amount you collected from your customer only you will pay, but here the GST amount you paying on behalf of your purchaser, from whom you purchase, you pay. This is what the reverse charge transaction, RCM. Another leg of RCM which is kept in abeyance is for purchase from unregistered. They wanted to find out the supply chain will break if you purchase more from unregistered dealer, because whatever the supply you receive from unregistered dealer, it is getting taxed at some part of time before the chain itself. Say I am purchasing from a trader who is not registered under GST. That person who is trading in the particular good would have purchased from a manufacturer. That manufacturer would have already subject to GST. So when it comes to the trader, since the trader comes within the 20 lakhs limit, he is not registered dealer.
Okay, sir. Sir, what in case of IT development contracts where you may raise invoice but customers may not agree? Sir?
Came on purchases. So whenever you purchase from an unregistered dealer, similar case with respect to transporter and the lawyer, you pay the GST and you take the credit. So when you purchase from the unregistered dealer, you pay the GST and credit so that the transaction trace can be found out. So more and more you purchase from unregistered dealer, the value addition component the price component will have the GST also. For that also you will have GST. So the end user will pay more GST. So the GST mechanism will be very say transparent only if the chain continue. There is a continuous chain. There is no breaking of the chain, and there is every person is registered and every person is passing on the credit. If this mechanism works well, then the final user who finds the goods, he will pay only tax on the value on which the goods he is being purchasing. That is why the value-added tax concept works properly.
Okay, sir. Sir, is there any change in the quarterly return form in the case of composite dealer 2021?
So when this will be dealt when the return session has been taken by somebody else.
Okay, sir. Sir, can you please explain any circumstances where the GST paid is more than GST collected and this scenario continues for entire financial year?
This will happen when we purchase from unregistered dealer. What I did know, when broadly speaking, there are 2 or 3 circumstances you can give as an example. One, you purchase from an unregistered dealer so that you don't get a GST credit. So whatever the sale you make, you collect GST and you will go on paying higher and higher amount since you don't have a credit. The next circumstances is the case where you purchase an item which come under a lesser tax rate. Say you purchase an item at 5%, the raw material item is 5% rate, and when you manufacture it is being sold at 28% or 18% or 12% in the higher rate, then the tax rate will be more. Since the credit what you take is lesser than the tax rate at which you are selling, the differential amount, the value addition will be more, so you go on paying more and more taxes on those kind of items. The another situation is what, the general trading situation where their margin is very high. When the goods, you buy for 50 rupees and sell for 100 or 200 rupees, there are certain business items, which is being done at this kind of enormous margin, those in those kind of circumstances you go on paying more GST. It is not, you are not paying from your pocket, you are collecting and paying. Remember that you are not paying from your pocket, you are collecting and paying. Only you will pay from your pocket as such, but it is being collected and paid. Most of the people think that when I pay from my pocket, it seems that I am paying GST out of my own earning. It is not from your earning, you are collecting and paying. Only this differential amount what you are on the margin only, what is it is coming going out of your pocket, that is also you are collecting and paying. Otherwise, whatever the GST component, it is on behalf of government you are collecting and paying. The only person who is paying, the end user who is consuming the goods, the end user is what he is paying the GST as such from his pocket.
Okay, sir. Sir, can you elaborate a bit again on the amendment of books under GST?
So what the amendment in books is nothing but if you have made any corrections, if you have made any mistakes, not corrections, if you have made any mistakes, corrections you make is what is called as amendments. So any book, whatever, say you have recorded a sale transaction wrongly, you have to raise a debit note or credit note subsequently. You cannot alter that particular transaction. Say I have drawn some picture. If the picture went wrong, what I have to do now, I have to keep that picture. I cannot discard that picture. Even if you in invoicing, when you make a GST invoice, if you have made an invoice that is before that particular goods are or before the time of raising of invoice has elapsed, if that invoice you have made it wrong, you can cancel this invoice. That is one option available. But when the goods are moved out of your factory and you have issued an invoice, you cannot correct that invoice. Wouldn't you know that particular person to whom the customer you cannot correct the invoice and get that invoice delivered to the customer. That is not allowed. Only thing, whenever you after the moment or the time of moment when the invoice has left your factory along with the goods, correction you should not do. When you are preparing invoice, at the time of preparation you have done, but before the goods are movement, you have something mistakes you have identified, you can cancel invoice. This what is amendment is, whenever there is a correction in invoice which was sent, you make a debit note or correct. That is what an amendment. That is what you can do. So similarly, if you do some, you have filed a wrong GST or return, means you can correct that return in the subsequent month. The particular month return is freezed. You cannot change. A revised return concept is not there. In subsequent return, say your sale transaction has been omitted, one sale invoice has been omitted in 1 month return, that one transaction you can include in subsequent month. You cannot amend the previous month transaction, previous month return, or you cannot revise the previous month return. You can just amend in the subsequent month. This is what the GST amendment as such is meant.
Okay, sir. Sir, who is a SEZ developer?
And this is again, going out of the topic today discussed. It has been a bit dealt with the other speakers who deal with the SEZ supply and those things.
Okay, sir. Okay, sir. Okay, sir. That's all, sir, from the question and answer session. So thank you so much, sir. Thank you so much for being with us today. That was an excellent and overwhelming session today. So it was more interesting, sir. And your examples for each and every topic gave us a deep down knowledge. So thank you so much, sir. On behalf of School of Commerce, Dr. M.Jegadeeshwaran, sir, and all the enthusiastic participants, I wholeheartedly thank you for being with us today, sir. Thank you so much, sir. Thank you for sharing your knowledge with us.
Thank you for Bharathidasan University, Mr. Jagadeeshwaran, his team, and particularly my particular thanks to the Vice Chancellor of the University, and thanks one and all for this wonderful opportunity.
Thank you, sir. Dear participants, has already instructed, there is no feedback form, and feedback form will be along with the assessment test, and it will be posted by 9 p.m. today. So stay tuned. Watch for the feedback form or the assessment link by 9 p.m. Thank you so much. Will join us tomorrow. Thank you.